Hello, everyone, and welcome to this Rule Symposium Overtime Special. My name is Albert Liu, and I'll be your host for the next 3 hours as we revisit your most highly rated sponsors and CEOs from the 2023 Rule Symposium, according to our post-event polls. Our guests today include Benoit Salle, Aya Gold and Silver CEO, Rudy Frank of Seabridge Gold, Frank Trotter of Battle Bank, Brien Lundin from Jefferson Financial, Scott Melbye of Uranium Energy Corp, and Scott Miniotis of AbraSilver, all of whom look forward to fielding your questions and comments today. We are live on YouTube and LinkedIn, and a special welcome to all of the Rule Classroom members joining us today from all around the world. It's time now to get underway, but first, it's my pleasure to introduce the founder of Rule Investment Media and the Rule Symposium, Rick Rule. Rick, how are you?
Albert, I should say the co-founder. I think you deserve co-founder status as well. I'm well. And thank you for causing this to occur. This is sort of the fulfillment for us as a strategy to take the symposium where it belongs, which is to say, in effect, a 12-month community, a 12-month event designed to teach our attendees how to become better mining stock investors and make some money while they're at it. So thank you for causing this to occur.
Rick, I thank you for getting up early in the morning today, even though everyone who is a longtime attendee of the conference knows that you are not shy about early morning sessions.
I tend to do better in the morning, Albert. So while this scheduling may have been unintentional with regards to that, I like to start off the day fast. We're doing it.
All right. So we invite everyone to submit your questions and comments, please. Our moderators are watching those and will forward them to me. But without further ado, I want to invite our first guest, Rick, our first guest today. He is a 25-plus year industry veteran. He's the president and CEO of Aya Gold and Silver and the founder of Canadian-based Semifo Inc. That is Mr. Benoit Salle, and he is his company was the most highly requested company of all the companies at our conference, Rick. So Benoit, welcome to the stream. Good to see you again. How are you?
Yeah, thank you very much for inviting me. Yeah, I'm very well. 10 o'clock Saturday morning in Montreal. Perfect time to come live with you guys.
Yeah, and thank you so much, Benoit, for taking part of your weekend to update us. Like I said, you were the most highly requested sponsor following the show in the post-event poll. So obviously you generated a lot of excitement at the conference. Can you bring us up to date? Has there been any news or important occurrences since we last saw you in July?
Yes, and let me say the conference was fantastic. Both Alex Ball and myself were there. We were at the booth. We listened to everybody. We had a great time with you guys. It was fantastic, and we got a lot of positive feedback. So I'm glad to be back, and I will always be there when you call upon Aya to participate, because it was a very, very good conference. So since we met, which is about a month ago, we had two very important press releases, one on August 11th and one on August 17th. The first one was the Q2 results. So we had very strong results for Q2. Our production exceeded guidance. We were at 526,000 ounces of silver production for the quarter, which takes us for half a year a little bit over 1 million ounces of production. Our throughput was excellent. Something interesting is the current plant is designed for 700 ton a day, and we're running at about 800 ton a day. So you always have that 15% leeway. Well, we're maximizing that. We're running above 15% of our design capacity. We had close to 10 million in revenue for the quarter, 3.7 million of cash flow, and all the KPIs, because, I'm an accountant and I run this in a very sophisticated, computerized way with dashboards. And we have all the KPIs that we're following: plant availability, recoveries of the first plant, of the second plant, mine throughput, plant throughput, cost per ounce. And all of our KPIs were green. They were excellent. The best one was cash costs. Our guidance for the year was at 14, and we were at 10.8 for the quarter. So very strong KPIs on economics, strong KPIs on throughput and on production. The other element that's important is, as you are aware, we are quadrupling our production for next year. This time next year, we're going to be on a run rate of 8 million ounces of production a year instead of currently 2 million ounces with the current facility. So that construction is now 45% complete. We've given a breakdown of every section of the construction. We're about 95% committed on the cost. So as of today, we can still say that we are on time and we are on budget. And in mining, to be on time and on budget is about 2.5% of the projects. Normally, it's above budgets and often quite late. So we're running on time and on budget. This time next year, we'll have quadruple our production. So that was the first press release. The second one, and I know for a short question, it's a long answer. The second one is we've doubled up our drill program. We announced an initial drill program in January. We knew that we would beef it up for year end. And we announced on August 17th that at Boumadine, our second project, which has got the most geological potential, we took the drill program from 36,000 meters, which is now complete, to 76,000 meters. So we have 6 drills turning at Boumadine. And at Zgounder, we've increased the drill program to 29,000 meters. And we also have 6 drills turning. So that was the April 17th press release, giving the kind of the roadmap till the end of the year. So you got 12 drills turning, and we'll be completing over 50,000 meters of drilling globally as an organization. So very, very strong KPIs, I said. And on the social front, we're well advanced on the construction of our power line, which brings green energy to the site. So we will be this time next year running on only green energy, solar and wind. That's almost that's following track, not almost completed. It'll be done in January, and we're continuing to follow all of our KPIs on ESGs. As you know, we have a $100 million facility with EBRD, which is an ESG loan, and we have very specific KPIs. And as of today, we have not yet drawn on it, but it's coming in the next few days. So this is the summary of what we have done since we've met, and there's more coming till the end of the year.
Okay, Benoit, the questions are coming in, but I'd like to ask Rick to lead off. Rick, any questions for Benoit?
I have so many questions, Albert. You're just going to have to shut me up when you think it's appropriate so that the attendees can ask questions too. But I would ask, with regards to the expansion of the capital budget, both with regards to drilling and, of course, construction around quadrupling production, how does the interplay between outgo, which is to say expense, and your balance sheet and income statement work? You're an accountant. Tell us how we can be comfortable that you're going to be able to finance this very aggressive growth.
Yes, that's right. So look, I'm an accountant, so it's one thing I control is numbers, and so what we have is we have the commitment for the construction. That's 140 million. We have the 100 million facility with EBRD, so that was perfect matching. We took 40 million out of our unrestricted cash. At the beginning of the year, we had 92 million in unrestricted cash, so we had to take 40 out, put that into a specific account, because it's actually 50, because there's the overdrawn account as well. So we put 50 million in a restricted cash account. EBRD comes in with 100 million, and that's 150, and that covers the capex expansion. So the capex expansion, which is at 140, and is fully funded, and it's very strict in restricted cash accounts. That left us with about 40 million, round numbers, 40, 50 million. And we had the expansion program, the mining and the drilling program that we were funding through this unrestricted cash. And we're generating cash. Last quarter, we generated 3.7 million. We'll generate similar this quarter. So we are generating our own cash. And Rick, drilling in Morocco is the least expensive of the world. Diamond drilling in Morocco is $120 a meter. all in, including all the tests. So we can add 40,000, 50,000. Like the new budget, the costing of the new budget is $8.7 million. So we have that. There's no problem. And the best kept secret in Morocco is, beside the mining code and the very, very good employees that we have, is the cost of operation are, I would say, a third of what you see around the world right now. 1/3, not 1/3 saving, 1/3.
I should ask, for the benefit of the Americans on the call, myself included, whether the numbers that you're quoting us are U.S. or Canadian dollar numbers.
U.S. We report in U.S. dollars.
Thank you. Albert, do I have time for another question, or do you want to go to the viewers?
Can I jump in with just one on-topic question here? This comes in. We
Please.
have a couple actually similar. Benoit, you mentioned in your presentation that you felt Morocco was the best mining jurisdiction in the world. That is someone coming from Quebec. That says a lot. Adam Mack asks, what does Rick think about gold miners in West Africa, Rick? Benoit has made a claim. He's laid out many reasons why this is a great jurisdiction, why it's in addition to that, it's virgin territory. Rick, your thoughts on West Africa?
Well, I wouldn't necessarily say that every jurisdiction in West Africa is among the best of the world, although Benoit, having operated there with SEMAFO for a very long time, may differ. People, I think, make a mistake generalizing about Africa in general and West Africa in particular. There are countries like Mali, or more particularly, I guess, Ghana, with a long mining history, lots of mining infrastructure, and a regulatory climate that's geared to mining. But I think the political instability that you're seeing across West Africa is going to begin to, if nothing else, begin to scare foreign investors. What West Africa does have is a superb, a ludicrous geological endowment, to perhaps not unlike Quebec, with the greenstone belts in northern Quebec. And I think an underrated human resources potential. I know Mark Bristow has said that replacing foreign workers with African workers across West Africa generates absolutely no skills deficit. In fact, a skills surplus, because opportunity in those economies is limited relative to opportunities in the West. So I think that West Africa as a whole is a place that will enjoy continuing favor, mostly because of the geological endowment and the human endowment. I'm interested in Benoit's assessment of Morocco relative to the rest of Northwest or West Africa.
Well,
Benoit, you want to comment on that?
Yes, absolutely, and that's very important. Is Morocco is not in the West African region, between Guinea, Mali, Burkina Faso, countries that I know extremely well. You've got Mauritania, which is a very large country, and now you're moving up to North Africa, where you have the whole Sahara belt that's cutting West Africa to North Africa. So Morocco is 14 kilometers away from Spain. When you go to Tanger, it's got a free trade zone with Europe. It's got a free trade agreement with China and one with United States. So it's a very different country. Albert, Rick, you're invited. Let me know when you have 4 days. We'll go together. You will be amazed by the infrastructure. You'll be amazed by the people, the quality of the road system. And we used to operate SEMAFO with 10% expat. We're operating AYA with 1% expat. That's the difference. So there you go. I mean, and you're right, Rick. Our construction manager right now is build plants everywhere around the world. And he's a longtime friend. We've been working together. He's in Morocco. He says he's never seen quality of cement like we have right now. He's never seen quality employees. He says, I would bring all the guys we're working with right now in Morocco. I'll bring them anywhere around the world. They will be the top. So, and that's why I know there's a video going on. I've sent it to you, Albert and Rick. There's a video that was posted this week on our progress. And you see, it's nickel construction. and quality. And mining, you have a problem on the stability of your ball mill, and you're done. You'll have 10 years of issues. Everything's got to be nickel and perfect, and that's what we're doing. So I think people have not yet understood Morocco, though we're going to Beaver Creek in 2 weeks, 3 weeks now, and half of our meetings are with strategics and other companies who want to know about Morocco. So it's really opening up. The quality of the geology, as Rick said, West Africa is fantastic. Morocco as well. Plus, it's a base metal copper belt. The Atlas Fault, definite VMS copper belt, so it's got great potential. So yeah, and look, we've worked in every country in West Africa, and we've been around. I would take a project in Morocco anytime today, in comparison to anywhere, even Quebec, where I am right now, and I would tell you that I would select Morocco every time.
Benoit, that's great, and Rick and I should definitely take you up on that trip. But I want to spend 1 or 2 nights in Montreal too. I can't go through there without stopping Montreal. Questions coming in. We may have to do a double overtime at one point. Question from Gord, and I know you touched on this in your presentation, which I recommend people go to ruleclassroom.com so they can view Benoit's presentation at the symposium. But Gord wants you to talk about current revenue, asset per share, and projected value.
So the current revenue, of course, as I said, it was almost 10 million last quarter, but that's on 500,000 ounces of production. Next year we'll be on an 8 million ounces run rate, and that 8 million ounces run rate is assuming a 2,000 ton per day throughput at the new plant. We know that we have that 15% leeway, so we're not going there right now, but we know we can increase that. So what I said at the conference on per share is not revenue per share, it's ounces per share. I mean, I've learned this from Mark Bristow. Mark said, sadly in our industry, we issue too many shares, and you may increase your ounces. If you increase more your shares, you're not increasing value. And that's something we've been always very careful at SEMAFO and now at Aya, is how many ounces of resource do we have at all of our projects divided by the shares outstanding. Now, we have a very small amount of shares outstanding in Aya. We have less than 120 million, which at the board, we own 52% of it. So we are increasing ounces very, very quickly, both at Zgounder and at Boumadine, and we're not increasing shares. So there'll be a steep curve up on value based on ounces per share, because production in mining is nice. It gives cash flow, but it reduces your measured and indicated or your reserves. So you've got to replenish your reserve. Whereas if you increase and you drill a lot, if you increase your ounces and you don't double up on share count, then you create value. And at SEMAFO, the maximum we had at one point was 200 million shares outstanding, and we had 4 mines running, or 3 mines running. So it's all about not killing it on dilution while you're creating value.
Benoit, question from Rita. This concerns expansion. She asks, are you looking to expand in Africa through new acquisitions? Can you comment briefly on that?
And the answer is yes and no. We are not stepping out of Morocco, but you saw, and I didn't mention it, we made a small acquisition, 7 permits right in the Zgounder region, copper, silver anomalies, historical copper silver mine. So we are looking at adding assets in Morocco to our portfolio. And those are extremely easy for us to make. They're not expensive. So there will not be a transaction on buying something else outside of Morocco. You will not see that. You won't see us buying a mine in Mexico or Peru or Chile. That's not going to happen. But you may see us acquiring some assets in Morocco, because Morocco is becoming, as I mentioned, extremely hot, extremely interesting. And we want to maximize the portfolio before it just gets to be too difficult. So we are acquiring ground around Zgounder, around Boumadine. And now we have this third asset called Tirzit, which is an historical copper silver mine, and we'll be also growing around that.
All right, let's go back to Rick Rule. Rick, let's keep the discussion going here.
Sure. In the two exploration programs that you're talking about, we've had the discussion before, Benoit, and people familiar with the classroom will know that my line of thinking, my line of questioning is always, what principal unanswered question are you answering with the drill program? Are you expanding certainty with regards to reserves and resources? Are you upgrading from resource to reserve? Are you expanding the resource base? What is it in particular that you're trying to accomplish with each drill program? And what will be the metrics? What will be the measurement of success? And how will we know if you're being successful or unsuccessful in answering the unanswered question?
Yeah, no, you're absolutely right, Rick. So, and the strategy is different for the two projects. So at Zgounder, we have a known structure, and we're drilling south or not south deeper. So we know the structure is 1.4 kilometer long. It's 20 meter thick. We see it all the way down 700 meters, but we've only drilled at 300 meters. So now we're putting 26,000 meters of drilling to continue the structure all the way to the granite, which is the control rock where we believe the mineralization stops. So at Zgounder, you've got 29,000 meters of drilling that's going to go just to complete the main structure. So this is to move ounces from inferred into M&I, measured and indicated, and a lot from measured and indicated to reserve. And how you move them is based on the spacing. So if you're at 100 meter spacing, 100 by 100, you are into the M&I category. And if you go to 25 by 25 or 50 by 50, depending on the area, then you move them up to the reserve category. So currently at Zgounder, we're at 96 million ounces of M&I. And of course, the objective for us is to bring those into reserve. So we have 70 of the 96 in the reserve. So we're able to convert 96 into 70. Now we want to grow the 96 to a much bigger number and bring that into the reserves as well. So, and that's the purpose of this program. At Boumadine,
are you willing to describe what that much bigger number might be?
Look, we've always said, and we have 8 analysts that are following us. We've always said the target on the main structure, on the first structure, is to take it from about 130 million to 150. That would be kind of the optimal for that first structure. But we have 27 targets on the regional play where we're looking to find another similar structure. So that first one on the 1.4 kilometer long, our target is between 130 and 150. And with that gives us a 15-year mine life, and we can, we will have a very long life. If we find another structure, then because of too many trucks going around, we'll be able to bring ore from another structure, and then we will be able to move the production from 8 million to probably 10 or 12 million with the same plant, just increasing throughput. So that's our target. At Boumadine, which is a project we started working on last year. We did 18,000 meters last year. We will be doing this year 76,000 meters. So we will be almost at 100. We will have a resource update in February, just before the BMO conference. And we'll have a PEA over the summer based on, we believe, 300 million ounces internally. That's our target, to be above, let's say just above 300 million ounces of silver equivalent. And now that is not in any model and valuation except for one analyst. And that is just, and that's why we're drilling 76,000 meters. And next year, if it all goes well, we'll probably put 100,000 meters in this to be ready to go to pre-fees and fees. That is a very big project. So our goal here is to move, to establish a resource, inferred to start, because the drilling will be at 200 meter spacing, but it's very, very continuous. And we're going to bring a little bit into M&I. So we have, I would say 70% of the program is infill drilling on the structure, but infill. And 30% of the program is stretching out to the north and to the south.
Rick, we got a question for you specifically, but Benoit may want to chime in as well. Max asks, what exactly is priced into the stock price, in your opinion?
I'm
He
going to
references
defer.
particularly this increase in production.
Yeah, I would rather that Benoit answered that. I can answer it from a personal point of view.
I think that's what Max is after.
I own the stock primarily because I was a Semifo shareholder for a very long time. And everything that Benoit suggested to me he was going to do, he did, which is, in my experience, very unusual. Then he sold the company to Endeavor. And the truth is that the assets that he contributed to Endeavor made that one of those rare circumstances where post-merger the share price went up, which is to say I enjoyed a double bump. I also understand myself the impact of a real silver story in a silver market. I don't think we're in a silver market yet. I don't see the sort of rabid for enthusiasm for silver stocks that has characterized various markets in my career. But when I looked at a successful mining entrepreneur going into what we sort of saw as the extension of the Iberian pyrite belt, silver belt into Morocco, and I heard the numbers that Benoit was talking about, 100 million ounces, 200 million ounces, 300 million ounces, 400 million ounces. And I asked the questions of Mr. LaSalle that you would see in the Rule classroom about the unanswered questions, how he was going to go about prosecuting this opportunity. And when the numbers started coming through, the same way that the numbers started coming through with Semifo, I thought, I have to own this in the speculative part of my portfolio. I have a prejudice, as you know, Albert, against small deposits. My belief is that small mines have all the risks that big mines have, but small mines can only ever make you small money. So when somebody talks to me about 10 million ounces or 20 million ounces of silver, I kind of don't care. If somebody talks to me about 300 million or 400 million or 500 million ounces, I start to care, particularly if what they told me before came true.
Yeah, good answer. I noticed Rudy Frank has joined us in the backstage area, and I want to bring him on because the discussion that we had earlier is actually a nice segue to a discussion that we often have with Rudy, and that is ounces per share, taking care of your shareholder. Rudy, welcome to the stream. Do you have a question for Benoit?
Just that I love Benoit's strategy in terms of offsetting dilution with ounces. It's a structure we've been following for 24 years, and Benoit, hats off to you, because our industry is horrible in terms of offsetting dilution with real value. And to have a way to measure it like you and I are doing, shareholders get that, they understand that. So congratulations on what you've achieved there.
Okay,
Thank you.
I got a question. Oh, go ahead. Is there an answer to that?
No, I just said thank you. And to the question on quadrupling production, is that in the value? The value is a function of ounces per share. I mean, production is great, and we all love production because it's great cash flow. It helps, but production, if you don't replace the ounces, it doesn't help. It just depletes the value. So you need to do it. You need to go cash flow positive. You need to execute this correctly because there's huge risk, as Rick said, on construction and capex and name it. But it's not that's created the value. The value, Semifo went from 100 million to 3 billion when we hit mana and we start coming through with ounces. And we had a drill program. And I said over the next 3 years, we'll add 4.5 million ounces. People thought we were like smoking cannabis, which was not legal at the time. So we were not. And we did it. And by coming in with the ounces, not diluting the company, we created 3.5 billion of market cap. So it's the same thing here. The question is, will the production increase the value? No, but by coming through with a major change in resource per share, that will increase the value.
Okay. Question, Benoit, from AF. He's addressing the topic of corruption, government corruption. Could this be a source of delays in licensing and things like that?
I was going to make a joke. No, we're not in Canada. But it's a joke. It's no, absolutely not. Absolutely not. Morocco have made it, part of their strategic plan that that mining needs to grow. They want direct foreign investment. They're supporting us. They are, why I said Morocco is the best place on earth. You get fully permitted in 2-3 months. Once you're permitted, it's permitted for open pit, for underground, for tailings expansion. You know how it is right now in South America and even in North America. It can be very, very difficult, and they can stop you. And in Morocco, it's a very clean structure. It's the king historically has been involved in mining because they're the #1 phosphate producer in the world with a company called OCP, which is a beauty. I always say OCP to Morocco is what Hydro-Quebec is to Quebec. I mean, it's the workhorse. And then they have Managem, which is a very well-run company, which is owned through their sovereign wealth fund with the royal family. But you know what? It's very friendly. They all want this to work. There's no money being asked or anything like that. And they could not. We're too much of a high-profile company. People who pay because they're not well structured in country, they don't have the right people, and they think that money fixes things, and it never does. It just puts your hand in it, and you go in forever, and at the end you lose your assets. So no, it's not. And you know what? I've been 28 years now in Africa. We've always respected that. No payments, but we'll deliver direct foreign investment, lots of jobs, lots of training. And they like it. Look, there was a huge article in the Financial Times of Morocco last week on Aya, how great a corporate citizen we are. And I there's nothing like that possible. And look at the permitting, how fast we get it, and how well it gets executed.
Okay, question from Geza regarding dividends. Benoit, when is the right time, and is that in your future?
There's always a right time when you cannot, if we can invest money in our projects and on other projects and make a greater rate of return than the paying out that 3, 5, 6% dividend. I'm not at all against a dividend. At SEMEFO, we were paying one when gold went up to 1925 in September of 2011. So we were paying it. Currently at Aya, we have to, grow Zgounder. We have to develop Boumadine. We have to build Boumadine into a much bigger mine than what Zgounder is. We have Tirzit. We're looking at other projects around that we can bring into the portfolio. So absolutely yes for a dividend. Timing will be once we're fully invested and we have, excess cash flow. Now, if we do get into a very strong silver market, and as I saw in gold, when we build Mana at $600 gold, and at one point we were selling it $19.25. That changes the numbers a little bit. So if we have a $50 silver market, we'll make just from Zgounder, we'll make 350 million cash flow per year. So
yeah, Benoit, talking about that $50 silver market, Denis asks, are you holding back any of your mined silver for a higher price? Are you blowing it all out?
No. We're yes and no. Again, is we manage this per semester or per quarter. Is we wait throughout the quarter, and we sold last week at 24.30. Well, it had not been there throughout the quarter. We maintain it throughout the quarter. We hold on to the silver, and we trade on our computer, on our cell phone. So if I take this, we trade live. We can put the offer and say sell on our cell phone live. So we watch the market, and with Hugo, our CFO, and Mustafa in country, we worked. And once we decided we're satisfied with the price, live, we let it go. So we try to, within a quarter, not to hold on to silver because we need to protect our cash flow, but we don't sell on a weekly basis. No, not at all. We maximize the selling price.
Okay. Unfortunately, Benoit, we are out of time, so we are going to have to do at some point another double overtime or something like that to get in all the questions as they come in. But I want to thank you, Benoit, for spending part of your Saturday morning with us and the viewers here on YouTube and LinkedIn. We really appreciate your time. You can see the interest in your company is very strong. So thank you very much and good luck to you. Before I let you go, where can people contact you, Benoit?
Always on every press release, I put my personal email. They just pick it up there, send me a note, and normally within a few hours they'll get an answer to myself or to Alex Ball that we all know. He's been in the industry for also 20 years, and we get back very, very quickly. Now, I have to say, you cannot ask for a visit because we do get that like 100 times a week to come to Morocco, which is not possible. Take a look at the video. There's probably close to 1,000 person working right now on the construction and the operation. So it's very busy. But yeah, write to me. I'll answer right back. And look, it's always a pleasure to be with you guys on a Saturday morning. It's actually, I'm like Rick, Saturday morning, early, best time.
Okay. And remind us again, Benoit, the website.
Yes, it's ayagoldsilver.com. So www.ayagoldsilver.com. And it is also on our press releases. Very easy to have access to. And go and look at all the videos that are there on the construction, on the presentation, on the video of your presentation of your conference. It's I think it summarizes where we're going and what we're doing.
All right. Thank you so much, Benoit. Appreciate it. Talk to you again soon.
Thank you.
Oops. I encourage everyone to go to ruleclassroom.com to catch Benoit's presentation at the conference. It was just fantastic. Our next guest here is Rudy Frank, founder, chairman, CEO, Seabridge Gold. Great to see you, Rudy. Again, a very highly requested company at the Rule Symposium. So welcome to you. Can you bring us up to date on anything that we should know since we last saw you? Any news or anything you want to highlight for us?
Yeah, and thanks for the opportunity of participating in this. It's always fun to get on the screen with you guys. When I look at our track record of interviews and exchanges, as long as Rick and you were on it, we get a lot more interest. So thank you. Yeah, so I actually just came back from KSM, so the timing on this is pretty darn good. I am continually amazed in terms of the progress we're making in early site construction at KSM to advance us through the substantially started designation, which will mean that our permits won't expire. Our man camp there now at Camp 11 is now 210 beds. Last September was 120 beds, so we've increased that. The road continuation up towards the mill and the tailings facility continues. We are advancing construction with our switching station with BC Hydro. They're doing that work on our behalf. We finished our first fish compensation area there, which is a big undertaking for us to show the commitment we have to the environment, water, and fish. And at the same time, we are very, very involved with site visits for potential joint venture partners, probably the busiest we've ever seen in the time we've been talking about a joint venture.
I got a question that came in during the last segment, Rudy, but I saved it because I wanted you to answer it. And obviously the premise behind Seabridge is a higher gold price, which we are pretty much guaranteed by this debasement of the dollar in a nominal sense. But S4 asks, if oil prices rise faster than precious metals, how are gold and silver mining industry going to be impacted? And that seems to be one of the keys, right? It's an increase in gold relative to other costs. So can you comment on that a little bit?
No question about that. If oil prices do go higher than the gold price, we're going to see the impact on operations. At KSM, we're fortunate, however, that we don't rely on oil. We can take advantage of the Northwest Transmission line that the government built, which comes right by our project. And we've now secured with BC Hydro 245 megawatts of power from that line. That's all hydro sourced. So, KSM is not only capital efficient in terms of returns, but also it's going to be very low in terms of carbon emissions.
Rick, question for Rudy.
Lots. Rudy, I want you to talk about the pre-build and your commitment to the Tall 10. What's the budget? What do you accomplish? And how many years of additional permitting does it yield you?
life of project if we achieve substantially started. So as we were having discussions with potential joint venture partners over the years, one of the biggest risks they saw was that in 2026, our permits would expire, which means you would have to start the environmental assessment process all over again, which would probably be another 3 to 5, maybe even longer years to get that going again. So we made the commitment as a company that we would go out and spend the dollars to ensure that our permits don't expire. In British Columbia, there's this mechanism known as substantially started, that if we achieve that designation, our permits are then good for the life of the project. The question was then, okay, if we're going to do that work, how much work do we need to do, and how do we raise the money for that? We looked at what we wanted to get done, and we were looking at a budget in excess of $400 million Canadian over a 2-year period before we wanted to go to the government to get that designation. We could have done equity, but it would have been highly dilutive. And Rick and Albert, you know that I despise dilution. So we actually went out and used the project as a funding mechanism. We've now secured with Sprott royalties $375 million US, about $500 million Canadian, and those dollars are going directly into the project and substantially started. 80% of that spend is going to First Nations related companies. So even though we don't have a production commitment there yet, we have made a commitment to the First Nations, and they are, participating in, the opportunities that exist at KSM.
Following on the same, my understanding of the Northwest BC Compact is that your most important regulator going forward will be the Tahltan First Nation. Is that accurate?
Yeah, I mean, we're dealing with 5 different groups that we were told to deal with, but clearly when you look at capability, but also in terms of land claims, it's the Tahltan and the Nisga'a that are most important. Interesting to note, Rick, that when we substantially started, even though we had impact benefit agreements in place with both organizations, they were competing with each other for opportunities at KSM. So if we gave a contract to the Tahltan, the Nisga'a were not happy and vice versa. So we suggested, why don't you form a strategic joint venture between the two of you, and we will contract this joint venture on the work available at KSM. So they've now done that. Matter of fact, they've had some very positive comments in the press about the structure of this joint venture at our suggestion and what they're getting out of that now as a combined entity. So, but you're absolutely right. If you do not have the support of the Indigenous groups around your project, you're not going to get your project moving forward. And we recognize that very early on. We've now been building relationships with the Tahltan, the Nisga'a, and others since 2008 when we first went into their communities.
Do you have an agreement with the Indigenous people and or with the province as to what constitutes substantial completion of the early works?
I wish there was a well-defined term. There isn't. It's basically doing work on permitted infrastructure that involves disturbance on the ground. So when we looked at companies that did achieve that designation in the past, Galore Creek has that designation, the Kitsault Molly project has that designation. We're going well beyond anything that's been done historically. We're building roads, we're building camps, we're building fish compensation areas, we've contracted with the BC Hydro to build our switching station, and we're building bridges. And as I said, by the end of 2023, this year, we will have over $400 million Canadian specifically into what we think satisfies the substantially started spend. And our expectation is we will go to the government at the end of Q1 of 2024 with our application. We are expecting that the First Nations will support that application, which will be critical. And then we expect to get that approval by the end of 2024.
Great. Albert, other questions, or do I need to?
No, there's questions. I actually have a question for Rudy. This is a newbie question, so please excuse that. But perhaps there are some people like me in the audience who have these questions. It's about investments that you make in permitting, costs that I guess were sunk into projects before you acquired them, which you acquired at a discount, Rudy. How do these flow down to the bottom line, i.e. the share price? Do they just sweeten the pot for an acquisition, or is there some type of quantitative measure of these improvements you're making, whether it's permitting or extending licenses or whatnot? What impact is there?
Well, the historic expenditures, I'll give you an example. So from 1999 to 2002, when the gold price was low, we took advantage of that and went out to buy our first wave of acquisitions, buying Courageous Lake and KSM. If you look at the assets we acquired during that 3-year period, the previous work by the previous owners, which include the likes of Placer Dome, Newmont, and others, was over $300 million. We bought these assets for $15 million. Now, we didn't take the $300 million onto our balance sheet, but clearly there was value, from that $300 million spend by the previous owners. As we spend dollars ourselves, though, I mean, our focus has been, Rick, you know this as well as I do, from day one, it's offsetting dilution with growing ounces per share. So yeah, we spend a lot of dollars. Our middle interest now is probably $1 billion on our balance sheet, but we have 170 million ounces of gold in all resource categories, over 54 billion pounds of copper, 800 million ounces of silver, and over 1 billion pounds of molybdenum. So we have offset that, and we spent a lot of money to get there. But again, growing ounces per share is a critical metric for us, and we've delivered on that.
Rick, a question for you as an investor. How do you look at these expenditures? How do you evaluate whether or not it makes sense to go forward with some of these expenditures?
I don't think there's a one size fits all, but I think the metric that Rudy has talked about is a valuable metric. I think that you look at any expenditure as to whether it's accretive. And I think one of the ways that you measure whether it's accretive is you look at the enterprise value relative to the net present value expressed in reserves and resources, and say, does this expenditure generate more reserve or resource growth per share than buying back shares? If the share price gets too low and you have enough cash in the treasury, the right thing to do is reduce the share count, because sometimes the ounce that you have is worth more than the ounce that you're going to get. Rudy and I have had this discussion over coffee and more productively over beer for 25 years. The correct metric for an expenditure is it dilutive on a per share basis, or is it anti-dilutive on a per share basis? Now, there are some value assumptions. If you believe, like I do, that a higher gold price is inevitable as a consequence of the debasement of the currency, but you don't know when it's going to occur, some of the net present value calculation around the existing ounces is subjective, but some of it isn't. And from my point of view, when I look at what is happening at KSM, it feels in a sense like a leveraged futures contract, except for one that doesn't expire. And if I trust the process, in this sense, the stock itself becomes the exchange. If I trust the process, I think optionality is probably the best way to play my belief that the gold price, at least in nominal terms, absolutely positively has to grow. If you think about owning a fractional interest in a leveraged futures contract around 170 million ounces of gold, against a market cap of, 1.2 billion dollars, it's a very attractive speculation for those people who share my point of view.
And if I can add to that, Rick, and I agree with you 100%, as you said, we've had these conversations many times. When we formed the company back in 1999, we essentially created an out of the money call option on gold that didn't expire. The dollars we've spent subsequent to that, and obviously the improvement in the gold price, has made these ounces in the money. And as we all know, value is in the money options are worth more than out of the money options in terms of what is the value of those options. If you look at KSM today, I mean, we now defined a project that has 47 million ounces of gold and proven and probable gold reserves and over 7 billion pounds of copper. If you look at the net present value of our PFS study, we're looking at a net present value at today's metal price north of $10 billion US after tax. Our market cap today is $1 billion. So we're trading at 10% of our NAV at today's gold prices, which for a development stage company is quite low. And I think the disconnect in our value versus perhaps peer group companies is I've talked about a joint venture for many, many years. It hasn't happened. Therefore, the assumption is it's likely not to happen. I'm taking the other side of that bet in terms of owning 95% of my net worth is in Seabridge common shares. And I'm sitting here today telling you that I am very, very confident that we will get a joint venture done within the next 6 to 9 months on terms we can say yes to, that will be highly accretive to our shareholders and will be like a light switch going off in the market. Oh, okay, I guess this can become a mine. Let's give it the proper valuation.
Question coming in from the stream, Rudy. Brien asks, I guess back of the envelope calculation, what would the price of gold need to be for your shares to break $15?
Well, our share price has got to the high 30s and the gold price less than it is today. So it's not just a function of the gold price, it's also a function of what the market is doing. I mean, I look today, and you guys know this as well as I do, gold stocks relative to the gold price are as cheap as they've been in a long, long time. Look at the ratio of the GDX or the GDXJ relative to the GLD. Gold stocks are dirt cheap today. I believe that to get really traction going in gold equities, we need to bring some new investors into the space. We're all here 25 years investing in gold stocks, but we need that new set of investors to come in. I believe that gold breaking through $2,000 an ounce and staying above that will generate a whole new level of demand and interest in gold mining stocks. Can our stock get above $15 at today's gold price? Of course it can. Just a little bit of investment demand coming into gold equities or us getting a deal done, I think will be highly rewarded to our share price.
Related to that, Constantine asks, does Rudy believe a partnership will be agreed upon before substantially started status is achieved?
I believe by us taking on the responsibility to get substantially started, it paves the way to get a deal done. If you look historically at KSM, two of the biggest risks we faced over the years was, number one, the permits could expire. Number two, all of the previous mine plans prior to the acquisition of East Mitchell from our next door neighbor, Pretium, involved a combination of open pit and large tonnage underground block cave mining. Unfortunately, there are very few companies that know how to block cave mine. Therefore, corporate development team taking a project like KSM to their board, great, interesting project, but we've never blocked cave before. How are we going to deliver on that on a $6 billion spend when we've never done it before? We've now de-risked the asset with bringing East Mitchell. We can show a 33-year mine life, open pit only, averaging over 1 million ounces of gold production a year and nearly 180 million pounds of copper. But secondly, the substantially started is a big de-risking as well. In prior joint venture discussions, our ask to our partners was, you spend the dollars to complete a bankable feasibility study so you can get to a construction decision. And during that time, you do the spend on activities to ensure that our permits don't expire, i.e. early site construction. We've now removed that from the dialogue. We're taking it on ourselves. Our commitment is that we will have a substantially started designation in place by the time you then make a construction decision to build the mine.
Question from Nick. This is to Rick, actually. When will gold explorers ever get any love again, given the higher cost of capital, Rick?
Highly subjective answer. My belief is that 85% of the junior exploration companies worldwide are worthless. I think a better question will be, when will the investment community become discriminatory enough that they discriminate between the 10% of the companies in the universe that add value and the 85 or 90% of the companies out there that are lifestyle exercises. The truth is that even in the last 18 months, a stock pickers market among the gold stocks, the gold juniors, has done very well. The market as a whole hasn't done well because I believe that 85% of the juniors are absolutely positively valueless. If, and this has never occurred, but if we reduce the number of juniors in the universe by half, and the money that went into sustaining those lifestyle juniors went in to the 5, 10, 15% that add value, that question would answer itself. The fault, yes, is the fault of the industry, because the industry has funded so many absolutely useless juniors. but the investors have allowed the industry to do that. I think we're gradually I hope through efforts like Rural Investment Media, as an example, that we're spawning a more discerning, more calculating group of investors. And I think that's what the industry needs more than anything else, to starve the losers and fund the winners.
I just noticed Frank Trotter has joined us backstage. I want to bring him on. Guys, this is you two are both in different industries, but provide a common function and probably share a lot of common customers, and that is people who want to save. Frank, you run a conventional bank. Rudy, you run a gold copper bank. So welcome, Frank. I hope you've been enjoying the discussion backstage. Do you have any questions to either Rick or Rudy about Seabridge or just the concept?
It was one of the things I was thinking. Good morning, Rudy, Rick, and
Good morning, Frank.
Albert. Great to see everybody. I'm sitting in Superior, Colorado today, and of course, that's a history of coal mining. Are there any commodities that are complete? You've obviously focused. I heard your list a little bit earlier: gold, silver, molybdenum, other commodities, or things like coal or others ever on your list?
Yeah, I mean, copper is huge right now. Matter of fact, we have a exploration program going on right now at our Iskut property that we don't even talk about much, which is about 30 kilometers away from KSM. And our focus there is gold, copper, porphyry opportunities. So, but you know, we've been very clear on message from day one. We're about creating optionality and leverage the gold price. We will continue to do that. If other metals come along with our acquisitions or exploration as we deliver on our promise on gold, fantastic. I mean, when we started this, we didn't really talk much about copper. Now, if you look at KSM, it's the second largest undeveloped copper project in the world today, ignoring our gold, our silver, and our molybdenum, second only to the Pebble project. So yeah, it's great to have copper because in this world, everybody knows we need more copper. And I think that's why our joint venture discussions is at the height it is today, because we do have a lot of copper in addition to our gold. And we can be a green project because of our use of hydropower.
Makes perfect sense.
Rudy, question coming in from Nick. He asked, if Zijin made an acceptable offer, would the government allow it to happen? Would they allow any foreign, especially Chinese mainland-owned company to acquire you?
That's a great question. You have to ask the government that. What I will tell you, though, is our focus is on the well-established North American listed mining companies that have the technical, financial, social wherewithal to develop a project like KSM. And I'm not too sure the Chinese companies check all those boxes.
Rick, thoughts on that? Good question.
Yeah, I think in the circumstance that's in front of us today, that probably the more obvious candidates, as Rudy suggests, are people like Barrick, where Mark Bristow is willing to swing for the fences and has said that the future of a gold company is partly in copper, or as Rudy has suggested, a company that has block caving experience. It's worthy to note that one of the best block cavers on the planet was Newcrest, a neighbor of Seabridge, which was just merged into Newmont, giving it, if the circumstances permitted itself, the right financial heft and certainly the right technological heft to make this work. Freeport also comes into mind, given the experience in block caving that they have as a consequence of their Ertsberg-Grasberg operation. So I think that there's, from my point of view, plenty of qualified candidates without Zijin. I happen to be close to Zijin going back a very long time. And I look at the sort of ethnocentric and sociocentric fears of Zijin expressed by the West with regret. I think Zijin has done a very good job, in particular in Congo with Kamoa-Kakula. And I think that this sort of xenophobic exclusion of outfits like Zijin make the world a less good place. But I don't think that Mr. Trudeau cares particularly about my feelings in that regard. So I think that Rudy is right, focusing on North American companies that might have more political acceptability in Canada.
And I might add to that, Albert, and it's not just the government that will be looking at something like that. It's also the relationships we've established with the First Nations. And I can tell you from just looking back in history, the First Nations do not like Chinese companies coming into their part of the world because it does take job opportunities away from them. So we have to be careful that we don't jeopardize any relationships we have. You know, you look at our relationship with the Telsen and Niska, I think it's clear, and you just read their own press releases. We are they point to us as the company that's done it best in terms of dealing with First Nations in the Golden Triangle. And we're not going to do anything to jeopardize that relationship we've built there.
All right. Unfortunately, we are out of time. This stream is going much faster than I thought. Rudy, thank you for taking the time on a Saturday morning to be with us. Thank you for that great presentation in Boca Raton. Encourage everyone to go to realclassroom.com and watch your breakout session. It was very informative. Rudy, how can people get in touch with you? What's the website? Give people some information as we move to the next segment here.
Our website is simply seabridgegold.com. And best way to reach me, and I am the investor relations person of the company. I do my best to get back answering all questions as they come in. Best way to reach me is through my email at Rudi, R-U-D-I, @seabridgegold.com. And just again, Albert and Rick, thank you for the opportunity of having my Saturday morning breakfast with you guys. And Frank, look forward to seeing you perhaps at our next conference.
Sounds great.
All right. Thank you, Rudy. All right. That was great. Our next speaker we have is Frank Trotter. He's the co-founder of Battle Bank, along with Rick Rule. Frank, we've done this so many times back when you were with EverBank. It seems like this is a familiar tune with Battle Bank. It was great to see you at the conference. Any news you want to bring us up to date on? Anything that people should know about since we last saw you?
Well, you know, it's been about a month since the conference, and we continue to build Battle Bank. You know, we're out there completing tying off all the little loose ends and crossing the T's, dotting the I's, making sure the online account app is in perfect condition. The online banking looks great. The operations, you know, we're raising a little bit of capital there for our final push into opening. And it's all going great. You know, it's one of those things that you build, and then finally we get to open the doors after our friends in the regulatory community give us the thumbs up, and everything's going great. You know, the team's in good spirits, and all the build is moving along. And you know, I do notice it's one of those things we keep looking at the big box banks, and you know, they haven't changed in the last month. They haven't changed in the last 100 years. Still paying low rates and charging high fees, and making their customers feel bad about themselves. So a lot of stuff going on, and we're just glad to be pushing forward.
Obviously, you know, regulation is a big hurdle. Are there other issues that you are addressing, technical issues or other issues, or is it strictly at this point we're just waiting for sort of the T's to get crossed and the I's to be dotted?
We're just waiting for our friends in Washington to get back to us. They're working hard. I think, as Rick said a number of times, we've been very impressed with the diligence and professionalism of the regulators we've been working with. And they're just finishing up the work they have to do. At the end of the day, the FDIC is an insurance company. I'm glad they're paying attention. You know, perhaps some might say that February and March might have had a little more attention due. And as a result, they're keeping an eye on things very carefully. It's been an interesting year in banking. You know, every year is an interesting year in banking. I go back over 40 years in the business, and you know, we started out when prime was 21 and a half. And people say, gee, today rates are really high. Well, maybe not. Just looked over here, and we had a 560 on some of the short-term treasuries. I think we were at 18% on a 3-month treasury when I started. So, you know, 560 doesn't scare us too much. But, you know, banking is always interesting. There are waves of economic issues. And I think, really it's just been an interesting year, and everybody's taken a little bit of time to make sure everything's tied off before we open the doors.
Yeah, Frank, you mentioned February and the drama we had last spring. I guess banking licenses aren't like taxi medallions in New York, where if one goes away, another one gets to open their doors. Otherwise, you guys would have been in business a long time ago with the closures we had in the spring. I got a question about interest rates. You talk about the big box banks falling behind. Now, why is it? Obviously they don't want to pay and increase their cost of capital, but is there something else behind their reluctance to offer higher rates? Is it because these rates could turn around in a couple months and be down low again? Is that it? They just don't want to commit to those, or what is it?
It's hard to say. I think, part of it, is certainly not a legal term, is this predatory. The big box banks have, some of them have 5,000 branches out there, and it costs a lot of money to do that. You have to staff those branches. I was in a branch of a local bank up in Avon, Colorado the other day to get something notarized. And I think I counted about 25 people in the branch. I think counted about 2 of them doing something. And so it's a matter of, you have to pay a lot of people, you have to pay for a lot of real estate, and because people aren't paying attention. It was interesting back at the end of the first quarter, one of the large bank CFOs was asked a question by the investor community as they were doing their quarterly investor call. And they said, well, why are you holding your rates so low? And I'll paraphrase here because he went on for 20 minutes about it. But basically he said, because customers aren't paying attention. They're not moving their money. So why do we raise our rates? And I think, we've always sort of joked that our biggest competitor is inertia. Something like 90% of retail banking deposits are still held by 4 or 5 big box banks at essentially zero interest rates. And I think it's just people don't move. And I know a lot of the people that follow Rural Investment Media are planning to move. When we asked for a raise of hands at the conference in Boca Raton, who would move over, and I think a good portion of the audience put their hand up. On the other side of that fence, we asked if anybody in the audience liked their bank, and I think about 3 hands went up. One of the folks came up afterwards and said, well, I have this wonderful private banker, and asked them, we're getting good rates. Yeah, we're getting good rates. So it's not like there's no place to go. But for the whole, I think the big box banks are doing it because they can. Much like some of the stores we see out there are charging high prices because they can. And until you pay attention, this is one of the reasons, of course, Walmart and Amazon have done so well over the years, is they offer great prices. People go to a place eventually where they get good value and good service. So the big box banks are really doing it, as I said, not a legal term, but on a predatory basis. And unfortunately, people aren't making them pay for it.
Frank, that is a very fair, honest, and free market answer to your question, actually, because really customers are supposed to drive the price. You shouldn't expect the entrepreneur to voluntarily pay more. But what it does say is that there's not enough competition in this market. Wouldn't you agree?
I think so. And, Rick mentioned earlier that the small cap gold miners, 80+% of them are really not worth the paper their stock certificates are printed on. And I think the same thing for a lot of banks. For so many years, and we respect local banks that are doing a good service to their community. Maybe they're in agriculture or something else in a city, but many of them are just a few folks put a little bit of capital in and just want to live off of it. Not really provide a service, just get up in the morning and put a branch out there and hope that people drive by. We had a friend that operated a small bank for many years, and they would make let's say a $5 million commercial loan, and then they go out front, pull out the ladder, walk up the ladder to their top of their sign and raise their CD rates by 30 basis points, and hope that somebody driving by would come in and put a little bit of money in the bank. So a lot of the banks out there, are they worth the paper their stock certificates are printed on? Probably not. They're round numbers, 9,000 banks. That's a lot less than there were 40 years ago when there were probably 15 to 20,000. So they're consolidating. It's not like Canada where they're really the 5 or 6 or 3 or 4 big banks really run the game. But in the U.S. it's a free market, so you can start your own bank, and that's great. But customers really aren't making them pay for it, much like the stockholders aren't making people pay for the small cap gold miners either.
So here's the question we always get. I'm putting it up first. Do we have any information? I know this is beyond your control, and there's nothing we can do. But is there? Do you have a timeline or anything like that? Any information?
We have a timeline. Last April. It's the way we kind of put it is once our regulators give us the blessing, it's 90 days after that. There's a few things that have to happen once we get that. And if you join the wait list at battlebank.com, you'll get that news first. You have a pretty good sized wait list of people, and we'll work through that once we're open. So if you want to be first in the queue for when we open, jump on the wait list.
Okay, so there's still hope for 2023. So we'll see. Not
we
only
think
do
so.
people want to do business with you, Frank, there's people who want to be in business with you. And so Chris asks, are you still accepting investment capital?
We are working through an institutional round right now. My attorney is sitting on my shoulder here, so I certainly can't promote that. But yes, we are working through that. We've engaged Raymond James to help us with that. And if you have any contacts there, perhaps you could talk to him in 3 or 4 weeks or a month. That would be great. Beyond that, I think my attorney's already reaching out through the internet here to put her hand over my mouth.
Okay. Rick, feel free to jump in on this one. This is from the Money Level Show. Yes, what is Battle Bank's diagnostic strategy for any problems on the horizon? How will customer feedback be used and communicated across the organization? How will Battle Bank assess competition? Kind of a multi-part question. I'll leave it up there for you guys.
Sure.
Your thoughts, Rick or Frank? Yeah.
Well, first up, we already are engaging with clients and prospective clients with feedback. We started building the wait list a little over a year ago. We've had multiple surveys along the way. What products do you want? How do you feel about client service? Where do you want to see this happen? And we're always watching the competition. It's interesting. There are a lot of neobanks out there that may have one product line. Maybe they have a high yield money market account. And that's great. I think that's providing a service. But, we're much broader. We provide access not only to those great rates, but also to the global markets, to precious metals, to market index. And, of course, we'll allow people to borrow against their precious metals holdings. So we're looking at the competition constantly. We are also, when you talk about diagnosing strategy for any problems on the horizon, we watch the economy. We have a number of people who are commentators in that area, myself included. And while nobody has the perfect forecast, we feel we have a pretty good pulse of what's coming down the road, and hopefully we'll be able to manage through that. And at the same time, we also take very little risk. We don't speculate on where the economy is going. We try to run one of the big problems we felt was going on in the early part of this year was people were borrowing short and lending long. Rick said that a number of times on multiple podcasts. And borrowing short means we're buying your money as a deposit in the short term, paying a high rate of interest. And if we lend that long and rates go up, there's some simple arithmetic. The value of that long-term holding goes down. And we saw that with Silicon Valley Bank, with First Republic, a little bit with Signature Bank. And, we hear there are a few other banks that are out there that still have some issues to work through, but I think most of that seems to have worked through the market. And I don't know if Rick has additional thoughts on that.
I do. I think in terms of problems, that the best way to avoid problems is to stick to what you do well. I don't think that Battle Bank, like every bank before it, intends to do all things for all people. I think our focus is on a customer base that you and I have come to know well for 40 years. I don't believe that any bank, even the biggest bank of the world, should be all things to all people. I think that we identify ourselves as a bank for an aspirational community that's contrarian, sophisticated, and hard money oriented. People who can't, as an example, operate a cell phone are probably not good customers for us, because your cell phone is going to be our bank. I think that banks need to be focused lenders. You and I, Frank, have talked to the precious metals investor community for four decades. We know those people. We know their needs. They know us and trust us already. So our marketing spend on that investor is less. And I can't think personally of any better collateral than physical gold and silver, that where the collateral is under our control. I think the problem for banking comes when the bankers take shortcuts, when they try to goose yields by borrowing short and lending long, when they target subprime, higher yield loans, either by way of gaming mortgages like 2008 or low FICO scores auto loans. I think that you avoid problems simply by avoiding problems, dealing with high quality depositors, dealing with high quality borrowers, and dealing within industries where you know the industry well and know the customer well. And I think, unfortunately, the last 40 years has been so benign that many bankers forgot what it was they do for a living. And I don't think that we will.
I think there's a great temptation, just following up on that. You sit around at loan committee or in the investment committee, and you say, we need another 10 basis points. We need another 0.5%. We need another % in yield to, I don't know, make our bonus, whatever. And that's just such an awful temptation that bankers have had over the years. And we have, through EverBank, never done that. We don't plan to do anything remotely like that at Battle Bank. And I think, your point about focus is absolutely correct. We're not chasing loans. I'm sure there'll be a lot of great requests come in, some of which we'll do. But we're not going out there chasing deals that we may or may not have a lot of history in or experience in. We're going down the middle of the fairway and trying to just do things that make sense, have a good yield. Love to hear your explanation of how to win the 100-yard dash here in a minute, but that's kind of what we like to do. I'll set you up for that one.
Well, that comment was only that an old fat 70-year-old like me could win the 100-yard dash if I was the only guy that showed up to run it. And I think, as an example, you're pioneering at EverBank foreign currency denominated high yield money market accounts and certificates of deposit was a wonderful example of looking at a market need and filling the market need when none of your competitors are there. Sure, Royal Bank of Canada could have done it, but did they? Not in amounts below $1 million. I think similarly, what we're intending to do in terms of establishing credit facilities or term loans for holders of precious metals and segregated storage is a wonderful example of seeing a market need exhibited by customers who we already know and designing a product to fill it when none of our competitors have gotten around to do that for 40 years.
Rick,
It's kind of funny, sorry, go ahead,
Albert. Can you describe that product for people who might be new to the
space? And what Rick said is very, 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 put all the pieces in place. We're lending against your precious metals holdings, gold or silver, that we maintain in secure storage facilities where we have control. So the plan right now is to have a 50% advance. So if you have, let's say, $100,000 in gold stored that we can help control, we can loan $50,000 against that. It carries a variable rate of interest. It operates like a line of credit. And if the price of gold, for whatever reason, declines, which we've done a lot of analysis on this, and over a 20-year period, there's only been 1 or 2 times when people have had to top off the margin amount. You can use this if you want to put a deck on the house, you want to buy more precious metals. You want to do an investment in something, maybe a small cap junior, that's up to you. But we feel that this allows you to have the liquidity and maintain your precious metals position. As Rick said, we've studied this market extensively, and in the banking world, there really are few, if any, other banks other than maybe a local bank where you say, I've got some gold or silver stuck in my safe deposit box, and they say, well, put it in ours, and maybe we'll lend against it, but it's pulling teeth. We're mechanizing this. We're allowing clients to do this on a routine basis. And we're really looking forward to helping people obtain that liquidity when they need it in the market. And again, it's funny with our foreign currency deposits. We sometimes have a saying we can't compete against JP Morgan and they can't compete against us. Well, Citibank dripped into the foreign currency deposit market briefly in the early 1990s and exited quickly. It's a great example of somebody who has the capability of doing something, but being relatively unwilling to meet customer needs. We're there to support this, whether it's with our online, Rick mentioned your mobile phone, which will absolutely be able to show you all your positions and allow you to make transactions on your mobile phone. But if you need to have a conversation with somebody, we have experts who have been in the market for many, many years, just to have a conversation with. What do you think about this? How do you feel about this? Should I look at the euro? Should I look at the Australian dollar? Should I look at the Chinese renminbi? And just talk it through with them, and then you can make your decision about what you want to buy or sell.
Guys, I got a question about the borrowing against gold. Does this require, what do I want to say? How many vaults will you be working with? Is there a chance that you will be working already with a vault that I'm working with, or is it a specific vault that we're going to have to transfer gold to and then incur shipping costs?
Hopefully not. Certainly our direct clients who buy or sell precious metals with us will be in one of our facilities. Brinks or Lomas or any of these publicly traded or independently audited storage facilities. And as we grow, we will expand that list when we are comfortable with the storage facility.
I see.
So yes, there will likely be many of the places that you keep your metals. We'll certainly be working with some of our other precious metals dealers if that's some place where you're storing your precious metals. So over, on day one, are we going to have 100 vaults? Probably not. But on day 1,000 or 10,000, absolutely we'll be storing and being able to lend across many different platforms across the world.
Okay. Albert, I want to jump in on that. I came into the business in the 1970s. And there was a lot of people in the 1970s who didn't trust their government, rightfully, but they trusted vault owners who they didn't know at all. And people who own gold or silver that's vaulted need to pay real attention to where it's stored. Frank mentioned that we want to deal, at least initially, primarily with publicly quoted storage companies, not because we want to buy their stock, but rather because we want to see audited income and financial statements. We don't want our vaulting facility to steal our gold. We also don't want our vaulting facility to go broke so that the stewards of our gold and silver became a U.S. bankruptcy court somewhere. And I think it's important that people who hold physical gold in segregated storage exercise at least a modicum of due diligence on their own behalf, the same way that we're going to do that. I watched a lot of gold disappear in the 70s that was owned by good people who trusted bad people. And as gold ownership becomes popular again, which I believe it will, my suspicion is that vaulting facilities located above a Chevron station in Lower Tickville are going to proliferate again. And I would encourage the people listening to this podcast that own physical gold and silver, and I assume that most of them do, to exercise some due diligence with regards to the dealer that they buy it from or sell it through, and with regards to the vaulting facility. Also, of course, with regards to your lender, who I suspect should be and will be Battle Bank.
Yeah, it's tragic that the most durable and secure form of money can be oftentimes coupled with the shadiest of business operators, completely defeating the. It's incredible how that happens, but it happens all the time. Guys, I was negligent. I looked away from the comment board, and the comments are streaming in. So we're gonna have to do sort of rapid fire. If you could keep the answer short and direct. Relative to what we just talked about, Middle Earth asks, why not a battle bank vault? Thoughts down the road, maybe not initially, but down the road, is this a possibility?
It's absolutely a possibility down the road. But a lot of people with publicly traded companies and audited financial statements do a bang up job of it. But we're taking the responsibility for your metals, and yes, we're using some of these vaulting companies as sub-custodian.
Okay, from Hassan, is there a tax advantage to placing gold with Battle Bank and borrowing against it? Neither of you are going to give tax advice, but is there some general information you can point people towards?
We can look at that up. It depends on your own situation, and again, we're not tax advisors, so let's push that down the road, please.
Okay. Will Battle Bank help connect accountants familiar with their strategies? This is from Whisper.
Yeah, we can look at that. In the past, when we were at EverBank, we had a number of accountants that helped people out, and we were happy to refer people to them. So yeah, we're happy to build that network. It probably won't be officially published on the site, but if you ring up the Global Markets Trading Desk, I'm sure the folks will talk you through that.
Okay, so our longtime friend Scott Williamson asks, and this is related to what we were just talking about, specifically, which vaults will we be starting with, Frank? Have we identified?
We're probably starting with Brinks and Loomis. Our VMAT is a subsidiary, of course. We've used both of those for many years in our past, dating all the way back to some of our first precious metals trades in the early 1980s.
Okay, Silver Bull asks, will you serve international UK clients? This is a common question we get a lot.
Yeah, the common question, right? The initial answer is US and Canada.
Okay.
Down the road, of course, the UK is, well, not all of the UK, a large portion of the UK is out of the EU at this point, but we have to work through a large number of regulatory issues to get EU or international clients. But down the road, we will, but US and Canada first.
Okay, John asked a question that's related to a funny moment at the conference, guys. And although I know the answer to this question, I just want to hear the answer again. And that is, what would the attitude of Battle Bank be if Sparkle Socks Trudeau requested the bank to freeze accounts of Canadian customers?
Well, John, you know what? I think we're a regulated institution and we operate in that environment. Obviously, we would do anything we could to avoid being required to do that. But we are under government, we follow the law, and if the regulators force us to do something, we're not going to happily do it, but we have to do it.
You mean if the U.S. regulators force us to do it? Yeah,
in that case, in the U.S., so we're not Canadian. I don't know what, if any, jurisdiction Mr. Trudeau has on us at all. So
I think Rick knows.
None at all, I believe.
I mean, as currently configured, if Mr. Trudeau wasn't able to come through the OCC, the Fed, or the FDIC, we could politely decline the Prime Minister's request, which I suggest we would do. If the Prime Minister was, over time, able, through the U.S. courts, an inconvenience that he didn't have to face in Canada, to ask us extraterritorially to impose his political will, I guess we would have to do that. I suspect that him doing that would take him between 12 and 18 months to negotiate the regulatory morass in the United States and the court system, by which time I suspect even the Prime Minister could have resolved his political dispute.
Yeah, this is purely my opinion, but I think a lot of our problems we have in society are not corporations yielding to government pressure. It's overzealous corporations maybe overstepping and carrying out that work for them without being pressured to do so. That's the problem, and I definitely don't see from where I sit, I can't see that happening at Battle Bank, and I'm not affiliated with the bank at all. Someone asked a question about gold yielding accounts. How do you feel about accounts that offer a yield for gold, and is that something you're thinking about?
Yeah, we think about things like that a lot. And I think just to put a slight twist on it, we are thinking about, it's certainly not the day one implementation of allowing people to earn their interest in precious metals. So down the road, perhaps it could be one of the bonuses. It could be the actual interest rate. But a lot of things in development. But day one, we're not doing that. But it's definitely something we've thought about literally for 30 years.
If I might add to that, some of the
Sure.
gold yielding accounts are circumstances where, in effect, you, as the gold owner, hypothecate the gold to the dealer. In which case you no longer own the gold. You're an unsecured creditor of the dealer that's paying you the yield. If you are interested in earning a yield on precious metals, pay extraordinary interest, extraordinary attention to the contract, because very often gold or silver linked accounts that pay you interest means that you have in effect consigned title of your gold to the person who leases it and then pays you part of the yield. If you're going to do that, if you're going to become an unsecured creditor of an over-leveraged dealer, do that at your own risk. I wouldn't recommend it.
Okay, couple questions about the storage. Is it the case that basically the customer is storing with a vault such as Brinks and paying Brinks to store it and insure it while they borrow against it with Battle Bank? This is a question from Hassan.
Hassan, they're really paying Battle Bank. We will have a storage fee like most any gold dealer because we incur costs. You do have to put insurance on it, stack it up in a room, and make sure there's thick walls and lots of lead based machines close by to make sure that this doesn't walk out the door. So it would be at one of the facilities, you'd be paying Battle Bank for that. And we will be negotiating good rates behind the scenes so that we have good client pricing.
And this is not an FDI insured deposit, is it true? It's
precious metals are not FDIC insured. Despite that precious metal depository being in the original Banking Act of around 1880, it has disappeared since the creation of FDIC. So they're definitely not FDIC insured. However, I think one of the things, when Rick's talking about due diligence on storage facilities, remember that we are, as a regulated institution, overseen by the OCC, the Fed, the FDIC, and others, along with producing an annual audited statement. So versus above the Denny's storage facility, we are heavily regulated and overseen, so customers can have great confidence that their metals are going to be there at the end of the day.
All right. I noticed Brien Lundin from Jefferson Financial has joined us backstage. I'm going to bring him on. Brien, good to see you. How are you?
I'm doing great. Good to see everybody here. Bunch of
morning, Brien.
Together on a Saturday morning.
This is fabulous.
Absolutely. Yeah, thank you for taking time out of your Saturday to join us, Brien. Thoughts on the discussion? You were back there listening. Any thoughts on the discussion we're having?
Well, I feel like I'm useless here because the very issues I'm nodding along with the discussion, and Rick is jumping in and making all the good points that I would have tried to make much less eloquently, I think. But yeah, if you try to earn interest on your gold deposits, it's not only that you're losing control of your gold to the holder, but there's no gold there any longer. Actually, you're either in the futures market or in cash earning interest, and they're shorting the metal. So I think there are ways to do it, and I think Frank is probably the leading expert on the face of the planet on how to do it and have there actually be gold there. So I'm very enthused and confident that this is going to be just a great service for silver and gold investors around the world, and initially America the U.S. and Canada.
Guys, question from Money Levels again. Can you talk about your IRA product? This is, I assume, the self-directed IRA product. Can you talk a little bit about how people can use that with some examples, maybe? There's lots of interest in this particular aspect of Battle Bank.
You're absolutely correct. We really feel that as opposed, stocks, bonds, and mutual funds are wonderful things to hold in an IRA, but there are other things that are eligible or not ineligible in the government's terms. And I think what we'll be doing is allowing you to form what's called a checkbook IRA. You have an IRA in custody with Battle, and underneath that is an LLC that you control. And in that LLC, you can purchase, for example, multifamily housing. You want to earn income on multiple apartments, or houses or Airbnbs. You can do that, and you can purchase that through your IRA. It is possible, even in the LLC, if you qualify, to borrow a little bit of money to help fund that multifamily home or that Airbnb that you're doing. And other not ineligible items, certainly many precious metals. You can do hard money loans. You can do private equity. It's really all the different things you can do that most institutions, if you go to any of the big brokers, they're not going to allow you to do this. So it gives you the flexibility to do all the different things. And of course, in our IRAs, you can hold precious metals, foreign currency, market index CDs as well. And the other part of that is if you have a individual company or maybe a side hustle, you can have a solo 401k. And a lot of people don't know about that. The deductions on any given year are in the range of $60,000. You have to look up the specifics for the year and your particular situation. But you can shelter a lot of income and push that forward to retirement. We're very excited about this business. And talking to a lot of people about how they want to deploy, particularly into multifamily housing, but also into precious metals, hard money loans, private equity, and other things. So it gives you the flexibility to do things you want to do.
Frank, once people become customers, will Battle Bank have consultants to consult on these types of arrangements? How will people know? Because this is somewhat sophisticated.
I think I think a lot of people at the conference met Marty May. Marty's a 30-plus year banker that will be available to talk to people along with the rest of his team. And on the global market side, we'll maintain a trading desk where you can talk to people about precious metals or foreign currencies or market index deposits. So yes, we're not going to turn off the phones. We actually feel that having sophisticated people on the phone to help clients out, as opposed to some of Rick's experiences with some of the big box banks where they just point to the phone, are exactly what we plan to do at Battle.
Okay. Question from AG about Canadian customers. Will the feature set be roughly the same, and then will the fee structure be approximately the same?
Yeah, no, they'll be the same. You're just a different person coming in from a different place. So there's no. I think the only thing is, we have a Canadian checking account out of the box? No, but you'll be able to have a U.S. Checking account. So many Canadians do have. Either interest in the U.S. or maybe come south as it gets a little chilly there in the winter, and may need a checking account or a debit card down here in the States. But no, there's no pricing difference. It's all the same.
All right, gentlemen, we are out of time. This segment went by very quickly. So Frank, I want to thank you for joining us on the Saturday morning. We loved your presentation, and thank you for answering all these questions. Battlebank.com is the website. This is where people can go to get on the list. And people who want to become potential investors, can you remind us where they should go for that?
No.
No.
Okay. Sorry, not allowed to talk about that.
There's my attorney just tapped me on this side.
Yeah. So excuse me for trying to get you arrested, Frank.
That's quite all right.
Okay, guys, let's do it again soon. Rick, you're on a short break, and we'll come back later with our next speaker. All right. I want to talk a little bit about our next boot camp, folks. That's going to be October 21st. It's going to be Rick's Royalty and Streaming Boot Camp, and we're going to be featuring Mining Hall of Fame geologist and mining financier Doug Silver. So we're really excited about that. Also, the dates for the 2024 Rule Symposium have been announced. I should mention that rulesymposium.com/bootcamp is where you go for the bootcamp. Also, we have a save the date for the next in-person conference, the 2024 Rule Symposium. That's been announced. We're going to be meeting July 7th through 11th. So please mark your calendars for that. Tickets will be going on sale soon. And of course, speaking about conferences, I have the New Orleans Investment Conference on my radar. It is right around the corner. And here, staying on with me now is Brien Lundin, president of Jefferson Financial. Brien, good to see you again. Thanks for popping on the webcast here. How are you?
Doing great, Albert. Great pleasure to see you on a Saturday morning here.
Yeah, I appreciate everyone taking time today in their morning to join us. Your thoughts on what you heard about Battle Bank? People really revved up about this product at the conference. Lots of questions. Their booth was swarmed, and it seems it's actually surprising that for a product that has such demand, there just hasn't been anything since Everbank, transitioned years ago.
No, and you know that our organization with Jim Blanchard was instrumental in launching Everbank way back when, which was really innovative. And there were a lot of lessons learned by that. But, if you look through the history of my long career, at least in investing, there are certain things you look at and you just know they're a slam dunk. It has a great idea. It has a proven management team. And you just want to get behind it as much as you can. And not Everbank, Battle Bank is that thing. They've proven the concept. They worked out all the kinks before, and it's going to be a huge success. I'm very confident in that, extremely confident, and am getting behind it as much as I can.
Right. And you see how complicated the banking landscape is, or just the securities landscape. I asked Frank that question. Faux pas on my part. I shouldn't have asked him that. He can't answer questions like that. It's just how rigid it is. And all banks have sort of become the same because of it. I mean, just conforming to this model of what a bank should be, outsourcing customer service, low interest for the most part. And really, like Rick, a longtime customer at a big box bank. He wouldn't tell us which one, but obviously a very big customer. And he just no special attention. No, people don't understand the product. So it's a bad situation. So I'm really looking forward to this.
Absolutely. And Frank navigating that regulatory quagmire, better him than me. I would not have the patience that he does, but he is very patient and very knowledgeable and has done this before. So, there's no better person around to do this. And that's why I placed great confidence in the future success of Battle Bank.
Yeah. Yeah. And I mean, that's how you stay in the business for like 3 decades or longer, right?
Yeah.
Is having that smarts. And actually, this is a little bit before you came on. We were talking about how, for some reason in the gold industry, the most durable, highly secure, historic form of money is often paired with the most fly-by-night, unreliable operators. It's just a funny thing about the industry. Not all of them, obviously. There's some very reputable ones that we work with, Brien, but oftentimes that's the case. So it is kind of nice to have this gold product being administered by an old school banker in Frank Trotter and Rick Rule. People who are high in integrity, and with track records that it's just not going to be the same fly-by-night thing that, unfortunately, as Rick alluded to, we may see. Anytime gold goes through a rapid increase, you see all kinds of people pile into the industry, new people, and that's where these suspects come from. But I want to talk to you a little bit about New Orleans, Brien, because every time after the Rule Symposium, we start licking our chops, getting ready to go to New Orleans and have some fun and see some good speakers and learn a lot and meet some companies. So what do you have planned for us this year?
It's another stellar lineup, and I'm extremely excited about the lineup we have here, and I should be. I picked them all myself, and after a few decades in this industry and being intimately involved in producing the world's oldest and grandest investment event, I've just about seen everything, and I'm an inveterate reader and consumer of investment intelligence, and I read everything and see everything, watch everything. So I know who are the best thinkers out there, the leading, the thought leaders, the people who are making sound arguments, some of which I may not agree with, but are sound arguments that need to be heard about the macroeconomic picture, the individual markets, and even a little geopolitics thrown in here and there. And this roster, I have to say, from the sheer bench strength of the speakers and thinkers that we're bringing to bear here, it's the best that I've ever seen at the New Orleans Investment Conference. And by extension, that means that's the best you'll ever see at any investment conference. And people will have to kind of trust me for some of these speakers, because you may not be aware of them. And I think over the last few years, attendees at the conference have wondered, well, who is this guy? Who is this George Gammon? Who is this Danielle DiMartino Booth? And who's this Dave Collum character or something like that? And then they come to the conference and they're just absolutely wowed and wonder where they've been all their lives, and start following these people. And eventually they become really big speakers and big names on the circuit, as it were. So we've got another stellar lineup, and I've been able to get a few people here that I've been trying to get for a few years and haven't. We're going to have, obviously, we're going to cover macroeconomics in the markets. So we're going to have James Rickards, Danielle DiMartino Booth. We're going to have George Gammon coming back. We have Rick Rule, of course, who's been a regular for more years than I care to remember, and I'm sure than he cares to remember. But Rick's going to be back, and he always brings his A game for the New Orleans conference as well, obviously, as his own event. We're going to have Brent Johnson, also known as Santiago Capital on Twitter. We have Lynn Alden this year in person. Now, Lynn has appeared virtually at our event and typically appears virtually at investment events, but she is coming in person this year, a rare occasion to see her live in person. And we have her on panels and presentations and the like. She is, bar none, in my opinion, the most brilliant macroeconomic analyst out there today. So very excited to get Lynn here in person. We have Dave Collum, who is a endowed chair of chemistry at Cornell, who is really wows our audience. And I guess it's safe to say someone who does not hold his tongue at all and is highly entertaining because of that. Peter Bookvar is the smartest guy you'll see on mainstream financial media. He's kind of the resident contrarian on CNBC. We have Jim Stack coming again. Jim, I have to say, is the most accurate forecaster of the markets that I've ever seen, and has done it over multiple decades. He has predicted and pinpointed every major bubble over the last 30, 35 years before anyone else, and very accurately pinpointed the timing. We have Peter Schiff, who obviously is very entertaining. Jim Urio, another great thinker, who is no longer on CNBC by, I guess, mutual agreement. Tavi Costa, who's a wonderful, one of the best analysts and chartists out there today, especially in the junior mining sector and in metal sector. I have James Lavish coming for the first time. A lot of people don't know who he is, but he does the best job I've ever seen of explaining complicated macro subjects in very simplified and cogent manner, and especially the U.S. debt spiral. He does a better job of that than anybody I've ever seen. So very excited about him. And
Brian,
we're going
can I interrupt for a second, Brian?
Yeah, absolutely.
The questions are starting to come in. So question from AG to you, Brian. AG, he's been following Jeffrey Christian regarding future gold and silver prices. Wants to know, you're familiar with Jeffrey, I'm sure. Yeah. How does your view diverge from his, or does it?
Jeff has some, I think, controversial views in the hard money community. That's probably safe to say, but that's because a lot of the hard money community is very much enamored with the idea of precious metals markets manipulations. And I kind of find myself in the around the middle of that spectrum. I don't think there are daily well, I think there are daily manipulations in the precious metals markets, but I don't think they're government driven. I think the very structure of the paper gold and paper silver markets, as well as those for a number of other commodities, are set up so that players with a lot of capital and really fast computers can manipulate those markets in the short term to their benefit and on a daily basis. So I think it's not so much relegated to gold and silver as it is the futures markets in general. I do think that government has come in at key big picture moments to manipulate the gold markets. And that's a proven fact. And, they've done it before. So who's to say they're not going to do it again or aren't doing it again at key pivotal moments? But I don't think there's day-to-day manipulation. And that's Jeff is on one end of the spectrum saying there's no manipulation at all. Even I believe in the futures markets. He also, I think, would give greater credence to the industrial demand for silver, which I don't. I think the monetary demand for silver is the key overwhelming factor in the silver market. But other than that, Jeff's been around forever in this market, like me, like Rick. So he has a wide and deep bank of knowledge and a lot of great contacts in the industry.
All right. And just to put a point on that conference, New Orleans Investment Conference, beginning of November, right? I think it's November 2nd. Yeah. Well, there's a link in the description, folks. So if you're interested, you can always find out about the conference. Rick, we had Jeffrey Christian as a keynote for our silver boot camp on your recommendation, and it was a great hit. People loved to debate with him. Some people did not. Many people did not agree with his views. But where do you come in? Are you kind of in the middle in terms of market manipulation and that sort of thing? Where do you come in on that?
I think Brian's views and mine are very similar. I've been around financial markets my entire adult life, and I hold the view that any market that can be manipulated will be manipulated in the near term. I don't believe in some grand conspiracy involving governments and the Bilderbergers or whoever they are. I believe that for most of the 40 years, you didn't need to reduce the price of gold and silver because the strong U.S. dollar was doing that for you. But certainly the recent conviction of the J.P. Morgan Chase gold trader around spoofing points to the fact that all major financial markets and many minor financial markets, like the over-the-counter equity markets, are consistently manipulated. Anybody who ignores that ignores it at their peril. I go far enough back, Albert, that I remember in the 1970s when the desks consistently manipulated the price of gold and silver up. They manipulate things in whatever direction is the easiest to do. As an example, building large future positions, long or short, and then acting precipitously overnight in the physical market so that, in effect, the tail wags the dog. And this will continue to happen. What was useful for me about having Jeffrey Christian participate in our conference was the institutional point of view around the silver market from somebody whose experience in the silver market goes all the way back to J. Aaron, one of the great metals traders in history, and precisely Jeffrey's establishment pedigree as being part of the Goldman Sachs commodity group. I thought it was important to get the institutional perspective on the silver market in front of an audience that was much more speculative. And I think it was a wonderful thing. Including Jeffrey in a conference actually costs you participants. There are people who are so disinclined to Mr. Christian's point of view that they will boycott an event that he speaks at. But I was willing to take that risk with regards to our boot camp. Frankly, I knew, like Brien does about the New Orleans event, that it was going to be a successful event. And I thought that the content was more important, frankly, than putting the butts in seats who would have objected to it.
Yeah,
By the
Rick.
way, Brian, unrelated to anything that Albert just asked me, congratulations on a spectacular lineup. I look forward to visiting with you down in New Orleans.
It's going to
Yeah,
be great.
and it goes on and on. Albert interrupted me. I could have been going on for another 30 minutes, and I would have.
Yeah, no, we got a lot to go, and I guess kudos on your decision to include him, Rick, because it's not a risk of losing attendees; it's a certainty. But it's
Yep.
worth it in terms of what he brings. So that was wonderful. I want to shift the discussion not from precious metals pricing and perhaps manipulation to uranium, because Scott Melbye has just entered the backstage area. So welcome, Scott. He's the CEO of Uranium Royalty and the director of Uranium Energy. Scott, welcome to the stream. How are you?
Well, good morning, everyone. It's great to be on the program, and it's great to follow up what was a very successful conference down in Boca.
Great. So can you tell us, Scott, since we saw you, you were, one of the most highly requested and very busy exhibitors on the floor, just like last year. What's happened since July that you could bring us up to date on?
Yeah, well, you'll recall in Boca, we were really focused on, really where we're at today in the uranium market. And it's truly one of the hottest, if not the hottest commodity in the world today. And that's based on just the pure supply and demand fundamentals of uranium. We're producing 50 million pounds a year, less than we're consuming. That wasn't a problem when the world was awash in inventories. But with all the production discipline and the speculative buying interest by companies like Sprott, Physical Uranium Trust, Yellowcake, and others, we've now finding ourselves at a point where we've transitioned to a production-driven market in uranium. We're not oversupplied, inventory-driven anymore. And lo and behold, there hasn't been enough, the prices haven't incentivized mines in the pipeline to be ready to start up. So we're very much now facing a supply shock, squeeze, call it what you will, in 2024, 25, 26. But we're already seeing that in the spot price of uranium. We're up 29% year to date and close to 100% increase in the last 2 years. So we were very eager in Boca to talk about UEC and all the steps we've taken, the close to $600 million investments we've made in the United States and Canada to build out our production centers in Texas and Wyoming, and also advance now a very exciting hub of uranium assets in the Athabasca Basin of Saskatchewan. So that was a really exciting time to be able to tell the story in Boca. But since that time, we've only seen the market tighten even further. We didn't see on the horizon the military coup in the West Central African country of Niger. It's been traditionally a top 5 uranium producer in the world. One of those mines went out of production recently. They slipped to 7th. But we have 2 or 3 very significant new mines under development in that country. It supplies 24% of the European Union. So if Ukraine, Russia wasn't enough to kind of shock us back into the realization that we need to secure our uranium needs for nuclear power in Europe and the United States, North America, from Western sources, this is just another example. We've seen the uranium price since Boca increase further to about $58.50, almost $59 a pound. I said early on in the year, I thought we'd see $60 a pound by the time the World Nuclear Association meetings in London roll around week after next, and I think we're going to get there. We've also seen advances on the U.S. Political front, with the United States Senate passing the Nuclear Fuel Security Act in the day before they left for August recess. We need Congress to return after the recess in September and have the House pass a similar bill and fund it. But what the effect of these pieces of legislation would be to ban Russian uranium. It's appalling that we haven't here over 18 months following the invasion, but ban Russian uranium and expand the strategic uranium reserve to a strategic enriched uranium reserve that not only incentivizes uranium production in the United States, but conversion and enrichment services as well. So I can tell you, and I feel like a broken record, but in my 40 years in this uranium and nuclear energy industry, I've never seen better fundamentals for our industry and a better investment thesis than today.
All right, thanks. Before we go to the questions on the board here, Brien, question for Scott, or Rick? Question for Scott?
Well, I have to congratulate you for having Scott on, because he is, in my opinion, the leading expert on uranium in the world today. He's been in it, through a couple of cycles, and really does know the market in and out, having seen it get up to $140 and come all the way back, and the cycles in it. The uranium story has been one, to paraphrase Rick, if not directly quote him, is always been inevitable, but not necessarily imminent. And I think that's the key right now. We thought it might be imminent in the past, but now we are seeing it respond in the spot market. So I guess my question to Scott was, you kind of touched on that and gave us a couple of years in the near future, but when are those supplies that you can see, the futures markets, those contracts, going to run out, and when are they going to have to really get into that? Are we going to see that kind of supply squeeze where they have to get into the spot market?
Yeah, well, we're
negotiating contracts at higher prices.
Yeah, no. And by the way, kudos, Brien, to your conference in New Orleans. We always look forward to it every year. As you know, URC and UEC have been regulars there, and it's really one of the best conferences each year. But absolutely, the contracting cycle with utilities has already begun in earnest. And if you've been following the quarterly reports by companies like Cameco, they're signing hundreds of millions of pounds of new contracts. Many of the first tier producers, have almost gotten to a point where they fully, or perhaps even overcommitted their near-term production. Even some of the new mines that are under development, like Paladin in Africa and others throughout North America, Africa, and Australia, have now been contracting fairly significantly. But I like to equate the situation to the game of musical chairs. The available chairs are filling up quite quickly, and there aren't enough chairs for the demand that we see in the uranium market in the near term. I'm not talking 10 years from now. I'm saying in the next 3 years, utilities are having a hard time seeing where that uranium is going to come from. So what is UEC doing? We haven't locked up our contracts in under pricing that reflects the last 5 years. We're developing Texas and Wyoming to come into production imminently, and in an unhedged fashion. So in essence, we're creating and adding more chairs that is going to be very welcome to some of the players that haven't locked down their uranium needs. And we have a lot of new entrants. We have companies that are coming into the industry for the first time through small modular and advanced reactors. Where are they going to get their uranium? We need 8 to 10 new mines built around the world within the next 5 to 6 years. And that's a tall order. We're not an efficient market like copper, gold, or silver, where there's a lot of idle capacity waiting in the wings. There is some, and those are some of the earliest movers. UEC being a great example, with mines in Wyoming that can start imminently. We've completed all the restart preparations there, just waiting for that $60 price to be sustainable. And Texas is about 12 months behind that. You have a couple other mines in like Langer Heinrich, which is starting up next year, and you've got projects like Boss in Australia. But we probably need 6 or 7 additional mines beyond that, and that means breaking new ground. And you see, it's not easy. Even mines in countries like Niger, which were slated to be some of the early movers, we're now wondering what the effects of the military coup are. So very exciting setup. If you're a long-standing patient investor in the uranium space, your day is here. I think you're going to be rewarded for that patience. If you haven't, and I made this point in Boca, if you're not invested in the uranium space right now, I don't know what you're waiting for, because this is really the best conditions we've ever seen in my 40 years.
All right, excellent. Brien, thank you very much for that question. And thank you for joining us today on the stream on Saturday morning. Really appreciate it. And look forward to seeing you in New Orleans, Brien. It's always a fun time. Link in the description for anyone who's interested. Thanks a lot, Brien.
Thank you. Lots of fun. Look forward to seeing you all in a couple of months.
See you, Brian.
All right, that was Brien Lundin. Rick, follow-up question for Scott?
Two observations, which I'd like Scott to address. The first is the increasing prominence of the term market relative to the spot market. People are focusing on the spot market, which used to have 80 or 85% of the volume, but the term market, which is more opaque, is gaining prominence, and I would suggest is more useful to the companies in terms of giving them visibility as to the price that they'll receive for the production. So the first observation I want to make that I want you to talk to is the term market. The second is the fact that despite the fact that we're in a uranium bull market, investor sentiment is still poor, as is evidenced by the discount to NAV enjoyed, if that's the right phrase, by the Sprott Physical Uranium Trust, the largest vehicle in the world for owning physical uranium. A circumstance where the market is firming so evidently with the transition to the term market, while investor sentiment remains so depressed. I mean, I just have to say, it feels like a coiled spring to me, but perhaps you could talk to both of those two observations.
Yeah, and I would consider myself a uranium expert, but global capital markets and equity markets, there's better experts than me to speak to that. But it just feels like there is still a risk-off jitteriness amongst investors that that they haven't left. Cameco's trading at probably 1.4, 1.5 P to NAV. So kind of the bigger cash flowing players in the space haven't traded down. But I would say across the board, uranium companies, had been trading closer to their 52-week lows than highs. But I don't think that's because of the companies themselves or the sector. I think it's really, we've had regional bank failures. We've had, real estate issues in China. We have Fed policy. And that seems to really keep a wet blanket on things. And when that finally becomes clearer and the markets stabilize more broadly, I think you have a rally in the uranium equities that will really be quite profound. And I think we're in the beginning of that, right? I mean, we've seen strong uranium equity performance over the past several weeks. Sprott's discount to their NAV is shrinking to about 1-2%. And what happens when they come in and start buying uranium again? We've seen the price of uranium in the spot market in the last couple of weeks move on 300,000 pounds. What happens if they come in and buy 500,000 or 1 million? And the other thing is to say, we're up 29% year to date in the uranium spot market, and that's largely without the assistance of Sprott. So I think that's a fundamentally strong message. Your question about long-term versus spot pricing, we're a bit of an outlier. Because most uranium mining companies have pursued a hedge strategy where they want to have long-term contracts in place to base load their operations. We're a bit different. We want to be completely unhedged. Now, it's easier for us because we don't have $1.5 billion conventional underground open pit mine investments where you've got to have that underpin before you embark on that journey. We're in the ISR uranium mining business. We can increase production, decrease production, and follow the market conditions much more easily. We fundamentally believe that in an oversupplied market like we've seen for many years now, putting primary production into the spot market's a bad idea. And companies like Cameco, and I'm very familiar with their book, their contract book sustained them over a long 11-year bear market with that contract hedge. But going into the most dynamic period in the uranium market that we've seen in 40 years, where scarcity is the name of the game, not oversupply, why would you want to have your production locked up under contract pricing that has ceilings, discounts off, fixed and base prices that are like a equivalent of a boat dragging an anchor in a rising market? We want to be unhedged to that upside. My job is not to hedge the upside price risk of utility fuel buyers. My job is to get you, the investor and the shareholder, the highest price I possibly can for our precious uranium production. And that's exactly where we are heading into close to a $60 market, and likely taking the steps to restart production here quite soon.
All right, guys. Questions coming in from the audience here. So let's go with AG or Middle Earth here. Regarding banning Russian uranium, he says it's ill-advised. Your thoughts, Scott, on that eventuality?
Well, I can say to the ethical, moral reasons, we should have banned Russian uranium literally in the days and weeks following the invasion. We did that with oil, coal, and gas in the United States, but we haven't banned Russian uranium. Why? Our dirty little secret is we rely on Russian enrichment for 20 to 25% of our enrichment needs, and 50% of our uranium in the United States for 20% of our electricity comes from Russia, Kazakhstan, and Uzbekistan. So there has been a reluctance to move too quickly on a ban, which is why in the United States Congress right now, there are two parts to the legislation. I think everyone that we talk to on the Hill, Republican, Democrat, House, Senate, believes in the ban, and that should move forward. But there are a lot of loud voices on the Hill that don't want to do that until we're assured that our domestic uranium conversion and enrichment capabilities, and I'll extend that even more broadly to Western nations, Europe. I think we can rely on Canada, the United States, and Europe to look after each other. But we want to make sure that our domestic industry can be revitalized and up and running quickly enough to replace those lost Russian supplies. So I don't see any negative downside. I think we kind of fell into the globalist trap of relying on countries like Russia and China for critical and rare earth minerals, for pharmaceuticals, respirators, and we're realizing that global international trade is still very important, but there are some things more important to our economy and our national security than to outsource to Russia and China.
Seems like this is indeed a moral issue, Scott, because sanctions come with penalties on both sides, and how much do Americans want to suffer to try and initiate regime change in Russia, which seems to be not working anyway. Here's a practical question about the facilities at UEC from Mike. If uranium is at 75 tomorrow, which assets, how quickly, and in what order would UEC bring that production online?
Yeah, great question. So we've said that, and Amir Adnani's been quite vocal about this, that if we see $60 or better consistently, not touching that and coming back to 55, we will move forward. Now that decision could be advanced if we saw the Nuclear Fuel Security Act pass in the House and go to the president's desk for signature. That would help incentivize us get into production faster. But the quickest and most immediate production comes from Irigaray Christensen Ranch in Wyoming. This was part of the assets that we acquired from Uranium One, literally months before the Russian invasion of Ukraine. We closed the deal with the Russians. It was the very high-profile deal that was connected with the Clinton Foundation and all that. But for us, it represents 4 existing well fields at Christensen Ranch that are ready to be turned on and start producing quite quickly. Irigaray is the processing plant, and it is fully functional. It's been toll milling for a third party and is ready to go. So when we say it's imminent, it truly is. We took the last 6 months testing pumps, valves, control systems, even tested flow rates through the ore body to ensure that we truly are ready to go, and I can say that we are. So that can come quite quickly within a couple months of the restart decision. The next would be Burke Hollow in Texas, where we have the production area 1 and production area 2 almost completed. Production area 1 has its complete monitor well rings in place and is ready to be developed. We do have to construct the ion exchange columns there, which is equipment that we already have staged at our Hobson facility. That's not a massive undertaking. We did that I think in roughly 6 months at Palangana. And that brings me to Palangana, which still has 1 to 2 million pounds of remaining production in production area 4. And concurrent to the Burke Hollow restart or startup, we would restart Palangana to mine out the remaining resources there. So the goal would be, obviously these operations are going to produce 1 million, 2 million pounds per year each in Texas and Wyoming, but the goal would be to get up to 5 million pounds of production within 5 to 6 years.
All right, great. Thank you for that very specific answer, Scott. Denis asks, what is UEC's plan vis-a-vis increasing exposure in the Athabascan?
Yeah, so we did announce last week that we acquired additional properties from Rio Tinto that are adjacent to our holdings in the eastern side of the basin near Rough Rider. We also acquired property, the Carswell property in the western side of the basin, which is close to our Shea Creek joint venture interest there. But as you know, we're big believers in the Athabasca Basin, those high-grade deposits that are the world's leading mines with the ore grades 100 times the world average. We want to be developing our pipeline to be into production. It's not going to come quickly. It's a 6 or 7 year process at best for us to do that. But while we're producing and cash flowing in Texas and Wyoming, we want to realize on the Rough Rider, Christie Lake, and Horseshoe Raven assets in the Eastern Basin. They have access to infrastructure, roads. There's nearby milling capacity, airstrips, you name it. And so with that critical mass now of these acquisitions of UEX and Rough Rider, we're moving forward with an economic study to determine what should the production timeline be? What should it look like? Should we approach others on a toll milling relationship, joint ventures, or build standalone mine and mill capabilities at Rough Rider? So we're very excited, very pleased. And I think, in a geopolitical world which is rocked by military coups and invasions, production in places like Texas, Wyoming, and Saskatchewan are as good as it gets.
Question from AG. Scott, what factors do you see exerting the most downward pressure on uranium prices? What's the risk?
Yeah, I have an indicator of our industry. When we're in the depths of a bear market, you get the news clippings from companies like UXC and TradeTech that kind of compile all the news stories on uranium and nuclear power around the world on a daily basis. And when you're in a bear market, it seems like 80% of the stories are negative. They're negative on supply and demand, negative on nuclear power growth. Today, as we sit today, the stories are 95% positive. We don't have enough uranium. Demand is increasing. Geopolitics are tightening the story even further. So, we are seeing overwhelmingly positive news. Of course, we're always conscious of things that could happen at nuclear power plants. Although, I think the lessons learned over the 50, 60 years that we've been doing this, it still is the world's safest form of energy based on all the trillions of kilowatts produced over this period. But, we look at Zaporizhia and in the middle of a war zone there and, watch that very closely. But the IAEA is in there and keeping an eye on it. But honestly, beyond that, I think the surprises are now coming to the upside. We're like the dog that's been hit with the newspaper too many times. We're so used to having negative black swan events impact our industry. Who's to say that things don't fall the other way for a change?
Okay. Scott, let's see, from Money Level Show. Thank you for driving these questions, by the way. How do you see the Advance Act passing in July impacting more nuclear adoption?
Yeah, I mean, there isn't only just legislation affecting the nuclear fuel cycle, but I've never seen it in my career of 40 years, Republicans and Democrats agreeing on something so wholeheartedly as nuclear power. If you're on the left, you love the carbon-free aspects of nuclear power. If you're on the right, you like that it just runs 24/7 with predictable costs. So we do have a very unique opportunity with Republicans, Democrats coming on and co-sponsoring and passing bills. The Advance Act and other similar legislation in the last couple of years have made huge strides in preserving the existing fleet of nuclear power plants in the U.S. We went from having 10 or 12 vulnerable plants. We did lose about 10 plants to early retirements before things started to take hold at the state level and the federal level. But we still had another 10 to 12 plants that could have been vulnerable, not because they're lack competitiveness. It's that we had a dysfunctional market structure that rewarded wind and solar and penalized baseload carbon-free nuclear. So the fact that the states have fixed those dysfunctional marketplaces, and the U.S. Congress passed the production tax credit for nuclear generation, we no longer have any troubled nuclear power plants in the U.S. I think the only two that have applied for a government nuclear civilian credit for assistance would be Diablo Canyon, which just got a second lease on life, even from Gavin Newsom out there, who realizes that 10% of energy supply in the central coast of California is very important. So that plant is applying for credits. And I believe Palisades in Michigan, which was already shut down, and they're seeking to restart it. But most nuclear power plants in the United States now are investing in uprates, license extensions, and planning for long-term operations, and not to mention new reactors, whether it's the SMRs of X-Energy, TerraPower, NuScale, GE Hitachi going into places like Ontario, Texas, Wyoming, Idaho. These are really exciting times, and that demand really isn't factored into the uranium market fundamentals. It will begin to be sort of quantified in next month's World Nuclear Association supply and demand report that's coming out of London in 2 weeks, and you'll see where that's beginning to be quantified. Its biggest impact is in 2030 onward, but the first of a kind units are all being built with government cost sharing to be in operation between now and 2030. The success of those is very critical. If they can be built online, on budget, there will be thousands of these ordered in subsequent decades. On-grid, off-grid, they can desalinate water, produce hydrogen, provide carbon-free power for data centers, crypto mining, provide process heat for petrochemical facilities and mining operations. So that really is the future, and the ADVANCE Act and legislation like it are really promoting both existing reactors and growth in new reactors.
Okay, Chris asks regarding uranium royalty, what are the prospects for the near-term pipeline?
Well, we're quite excited, and I think with now that I can get back on airplanes and get to places like Australia and Africa again, we are very actively out there. We're very excited about our 18 royalties and sort of the inaugural portfolio. And a number of those are beginning to cash flow now, like MacArthur River, Cigar Lake in production, Langer Heinrich coming online, Lance in Wyoming. These are all near-term producers. But, we're a growth platform, and we want to emulate the success of Franco-Nevada, Wheaton Precious Metals. And so while we have 18 royalties today, I want to have 24 by this time next year and continue to grow exponentially. And I can tell you, with the challenges that equities have had, despite the great news and great prospects in our industry, a lot of companies' share prices have been trading, at a discount to their net asset value. And so, and we all know the cost and covenants that come with debt financing of new mines. We're a very attractive alternative for mine developers, where we can come alongside and provide $30, $40, $50 million or more to help them get over the hump and into production, and in exchange take a royalty or stream on that asset. So we have 5 or 6 really great opportunities in the mix. I can't guarantee that all 6 will move forward or any of them will move forward, but I can tell you we're that active and in every jurisdiction globally.
Okay, here's a great question from Marcy and John, and you actually touched on this in your workshop at the conference. So I recommend anyone who's interested in the answer to this to go to ruleclassroom.com and watch Scott's presentation. But they ask, please comment on the small modular reactor development.
Yeah, well, it's very exciting. In the United States, we have the Advanced Reactor Development Project, ARDP, as part of the Department of Energy. It's 50-50 cost sharing. The first of those units, one is going into TerraPower, which is the Bill Gates designed reactor, is going in to southwestern Wyoming to replace a retiring coal-fired plant. We have X-Energy that's going into just south of Victoria, Texas, very near our Burke Hollow operations, where they're building a small modular reactor to power a Dow chemical facility. We have NuScale building at the Idaho National Labs as a third project that's being funded on that. These are all intended to be in production by 2030. In Canada, GE Hitachi is moving ahead very aggressively at Darlington. That may be the first SMR that comes online just northeast of Toronto. In the UK, it's called Great British Nuclear Program. They're looking to build additional large reactors in the UK, but also building as much as 16 small modular reactors. You would think Rolls-Royce would have a leg up there, but it's an international competition amongst all the SMR providers to help build out the UK's nuclear energy program there. So it truly is a global story. I think it will revolutionize energy, not just nuclear energy, in the next decade, but we're beginning to see the wheels turning very aggressively on that front.
Okay, wonderful. Just noticed John Miniotis of AbraSilver has joined us in the studio. I'm going to bring him on stage. John, welcome to the stream. How are you?
Hi, gents. Doing very well. Thanks.
Thanks for taking time out of your Saturday morning to join us. And we're having a great discussion with Scott Melbye here about uranium. Feel free to jump in if you have a question or two, John. Rick, the viewers have been doing a great job of doing our job for us, but do you have a question? Any questions for Scott based on what you just heard?
Well, of course, lots. I'm, as you know, fascinated by the uranium space. With regards to uranium royalty, if you could, John, or Scott, I'm sorry, are you more interested in primary uranium or byproduct uranium? Or are you agnostic as to the source of your uranium royalties and streams? And are there political jurisdictions, given your group's fondness for the United States and Canada, that you are not attracted to?
Yeah, well, on that note, we do have a very strong filter and commitment to ESG. I don't think you would see us getting involved in any projects in any jurisdictions that would bring reputational harm to us. So that goes right to the board, and it's a commitment. Fortunately, in uranium, we don't have a lot of blood uranium type companies because the nature of uranium mining, we've had to be very strong on health, safety, and environment for many, many decades to ensure that we get the social license to operate in any country that we're in around the world. So, that I would say, we're obviously watching developments in West Central Africa because some of the best new mines potentially in this cohort of 8 to 10 new mines that are needed between now and 2030, may come from that part of the world. So we're watching that very closely to see whether that sets back or it's just, that part of the world is used to those kind of developments. So we need to know if this is transformational or just kind of an evolution of politics in that part of the world.
There's been a lot of speculation that BHP is going to spend $25 billion in Australia at Olympic Dam, which would generate a lot of byproduct uranium. Would you all have an interest in financing mine expansions or mine development where the primary revenue for the stream, for the mine, wasn't uranium, but where there was potential byproduct production?
Well, we know from base and precious metals royalty companies, those kind of byproduct situations are very attractive because the uranium in many cases may not be the focus of the company. It may be copper, gold, silver. So if we can come in, finance the uranium circuit and take all or a portion of the uranium offtake, that is a very attractive model. And I will say there are opportunities that we're in discussions with along those lines. It's a very small industry. If we played 20 questions as to what our pipeline looked like, you'd guess everything on the 5th question. So I can't get into details, but we are very interested in byproduct uranium. We're looking at both streams where we take physical uranium, and we're looking at traditional royalties, and even looking at something more very, I would say, creative, structured finance that might incorporate streams and royalties into it. So again, very active pipeline, and hope to have news on that in the coming months.
All right. John, Rick, any other questions for Scott?
Excellent. No, I mean, yeah, very, very thorough there, Scott. I mean, congrats on the rising uranium prices. I'd like to see that sort of spread across to some of the other commodities.
Yeah.
So yeah,
thank
congrats.
you, John. I'm a big gold and silver fan as well. So best wishes to you guys as well.
Thank you.
Scott put in his time as we all watch. Maybe a few more from the audience before we let you go, Scott. Denny asks, how fast can an SMR be constructed relative to the older, larger reactors?
Well, they should be a lot faster. You're not, I equate a large 1600 megawatt reactor. It's similar to constructing a massive infrastructure airport project in a major global city. It's a massive undertaking and billions of dollars of investment. SMRs are more equal to building airplanes rather than airports. You're constructing them in factory, shipping them on site. You get the economies of scale. And again, these are 50, 100, 200 megawatts. They're more akin to the reactors that have worked very efficiently and safely in aircraft carriers and submarines since the 1950s. So we should be able to build these in 2 to 3 years. And, for the first of a kind units that are coming online in Wyoming, Texas, Idaho, startups are ranging from 2028 to 2030. So that's going to be an important milestone for us as an industry to achieve, but will be one of its biggest selling points.
All right. Thank you very much, Scott. Can you let us know where people can reach you if they have additional questions?
Yeah, well, absolutely. Go on uraniumenergy.com for our current press releases and presentations, and the same with uraniumroyalty.com. And certainly very accessible if you want to contact me directly. I'm available to talk to you. That's what I loved about the BOCA conference is we just had so much time to sit down individually with shareholders and seekers in the uranium space to really talk about the market and the companies. So again, appreciate the venue, Rick and Albert, that you provide there. And we're looking forward to New Orleans as well.
All right. Thank you very much, Scott. See you again soon. I just want to remind everyone that Scott's presentation from the 2023 Symposium, the workshop, is available at ruralclassroom.com. And not only that, UEC participated in a very successful uranium boot camp. And if you didn't attend that event, you may want to go in and watch the recordings. Those are available for purchase at ruralclassroom.com. Okay, moving now on to our last guest, that is Scott Miniotis, CEO of AbraSilver Resource Corp. Scott, sorry, John. Sorry about that. My notes are messed up, John. Sorry about that. Your company highly requested following the conference, and so your story must be very good. So for the people who don't know you, can you just give them an introduction to AbraSilver and let them know what you have going on, why they should be interested in your company?
Perfect. No, thanks very much for the opportunity. I mean, it was certainly an excellent conference in July, and definitely an honor now to be invited back.
I'm just going to get some technical assistance for John here to see if we can sort out some of those audio issues. Sorry about that, folks. These things happen sometimes on the live broadcast. Rick, anything you want to add to that? Or maybe perhaps I could put up some of these questions. Middle Earth asks,
I can comment for a little while if you want me to give you cover to do the technical issues, because I've got a lot to say.
Absolutely. I'm sure he would appreciate it.
I really want the people listening to this phone call, or pardon me, to this presentation, to listen to it in the context of the Rural Investment Classroom. When we talk about adding value through answering unanswered questions, you will note that each of the presenters today has delivered you a real smorgasbord of unanswered questions. So with regards, as an example, to Abra, What we've learned is that there's at least a 250 million ounce universe. So it's a credible deposit. But you are answering really important unanswered questions, both in terms of regional exploration, but probably more importantly, in terms of the financeability and the eminence of the finance around Abra. It's important when you listen to these presentations that you don't regard them as entertainment. It's important that when you listen to these presentations, that you listen to them in the context of the analytical frameworks established by the Rule Classroom, in particular, the Rule Classroom about interrogating potential investments. This is a wonderful opportunity to sort of codify your understanding of your speculations before you've made them, and a wonderful opportunity too to monitor investments that you have already participated in. I myself have derived, I think, substantial benefit and comfort from this discussion, both in terms of the magnitude of the deposit, but also in terms of the greater understanding of the deposit, of the ability to develop high-grade starters, which give you quicker capital payback, and then, of course, the exploration upside. Albert, I'll turn it back over to you if that's appropriate.
Sure. Question coming in, this one from Middle Earth, regarding the politics of the region. If Javier wins the election, will that improve the outlook for Abra? Looks like we've got John back. Let's try again, John. How do politics work into this?
Yeah, okay. Can you hear me much better now, hopefully?
Talk a little bit. It's still breaking up a little bit, but it might be improved.
Yeah. So in Argentina, it's the provinces that own the mineral resources, and so it's really the provincial politics that matter. And so we're located in the most friendly province in Argentina. We're in the Salta province, which is absolutely booming with a whole bunch of lithium investments all around us. There's literally 4 projects, lithium projects being built within a 20 to 30 kilometer radius of us. And these are mega projects, well over $1 billion market caps. So there's lots of money being poured into Salta at the moment. Regarding the federal elections, it's certainly been getting a lot of headlines there, as you would expect. I mean, Argentina has been a leftist, socialist country for the past few decades now, I would say. Now, clearly they have economic issues. And so this year is an election year. In October will be the presidential elections. They had the primary runoff just recently completed. And as you mentioned, there was a libertarian there that won, I believe, over 30% of the popular vote. And so he's very, pro-mining. He's, against government, against sort of bureaucracy, and very, very vocal. And so he's getting attacked by, traditional sort of leftist media, et cetera. I'd say for us, honestly, I mean, yeah, if he or, any of the other leading candidates right now come in, it would certainly be viewed positively. So there'd be more positive, I'd say positive implications around having a more pro-business friendly government in place. But for us, I mean, before we get into construction, we'd be signing a stability agreement with the government, which locks in your tax rates for 30 years, locks in your royalty rates, and prevents them from rising above what they are at the time of the bankable feasibility study. And so if tax rates reduce, we would get that added benefit. But if another government comes in down the road and raises taxes, our stability agreement would lock in our tax rates. So for us, we see Argentina, and in particular Salta, as being quite stable at the moment. And mining's been going on for several decades now in Argentina. We're not the first company in Argentina. We certainly won't be the last. All the majors are there, whether it's Barrick, Newmont, Glencore, now Pan American Silver, et cetera. And so mining's been going on despite, many governments that have come and gone over the last few decades. And so, yeah, we see Argentina as being a rather, having a very positive outlook as we look forward.
John, you made the distinction between, I think it was provincial and federal. Guys, Rick and John, can you elaborate on that? How do the different branches of government interplay here? What's important?
Sure. So I guess the best way to think of it is similar to the U.S. So in the United States, if you're in Nevada, that's obviously very different from being in Hawaii or in Maryland, which has never had any mining. And so it's similar in Argentina. So it's the provinces that control the mineral rights. So 100% of our permitting is done directly with the provincial authorities. And so the Salta government is very pro-mining. Typically, we've seen EIA approvals in about 18 months' time. And so we're expecting between 18 to 24 months' time, we'd have environmental approvals in place here. And, I think mining is absolutely fueling the economy of Salta. And there's certainly other, well-known mining provinces as well, San Juan being another one. So there's certain provinces within Argentina that are very open to mining, I would say.
Okay, question from Chris. What altitude are you at, and what is your water availability? Is this an issue?
Sure. So we're at 4,100 meters elevation. And so we're actually in the Puna region of Argentina. And so it's quite a dry, desert-like environment with a high elevation, of course. And so we drill 12 months a year. And so elevation is really no issue for us. It's not like there's seasonality here. So it's a dry environment here, very little snowfall. And again, we're right in the heart of all these lithium salars that are at similar elevations and are currently being constructed. And so, 4,100 meters elevation there, no issues really with that elevation. And for water availability, we have a number of aquifers that would allow us to process up to 9,000 tons per day. And so our pre-feasibility study will be done at a throughput rate of about 9,000 tons per day. And we already have the easements in place for that water.
Okay, Rick, just time for maybe two more questions for John. Do you have any more questions?
I would ask John to elaborate on an earlier statement about the lithium developments in Puna and the fact that as those projects go through, the opportunity for shared infrastructure, access, egress, power, the impact of that existing mine development on your potential development, I think is worth exploring.
Yeah. So there's literally 4 large-scale lithium projects within a 30-kilometer radius of us. Actually, they circle us. So there's one to the north, one to the east, one to the south, and one to the west of us. And so there's already been a natural gas pipeline that's been built. There's a solar farm to the north of us, a couple hundred kilometers to the north of us, that feeds sort of the grid. The highways have been upgraded. There's a number of benefits for sure when the region is booming with mining construction that clearly benefits us. And these are our immediate neighbors. It's not like they're hundreds of kilometers away. You literally pass them on your way driving to our site. And so there's certainly a number of positive infrastructure benefits there that are being built right now as we speak. And then also the availability of having a construction team is also something that could be critical for us, because all of these projects are being built right now. They'll be completed within the next 12 to 24 months. And 24 months is likely when we're going to be looking to get this into that construction stage. And so the availability of labor, of project teams that have just executed on large scale projects is certainly a benefit for us, I would say.
And I assume that you have begun pre-construction finance discussions with various financial intermediaries. Are you finding that the mining finance establishment is looking with greater favor at Argentina than would have been the case 10 or 15 years ago, or not?
Yeah, so I'd say we're still certainly in preliminary sort of stages there of mine finance discussions. But yeah, absolutely. I'd say for sure the overall investor sentiment for Argentina has opened up. especially regarding sort of in Salta, it's really been the lithium that's been the major boom. But then also in other parts of Argentina, like in San Juan, where you have Lundin Mining looking to acquire and build Jose Maria, and certainly several other world-class copper projects, all looking like they're going to be entering construction in the not too distant future here. That certainly, opened up a lot of people's eyes and saying, look, this is a country that can no longer really be ignored. The geological potential is outstanding, frankly, in Argentina. And right now they seem to be open for business. And so, it's certainly having a number of peers building projects absolutely helps.
Okay, I think that's all we have time for, John. Thank you so much for joining us here. Thank you for attending and sponsoring the conference, and for working through these technical issues with us is well worth it, and we appreciate your contributions.
My pleasure. Thank you for having me, and my apologies for the technical issues. I'm not sure what's happened. It's unfortunate. But yeah, looking forward again to being there in person next year, and certainly there'll be no technical issues then.
Excellent. Thank you so much. And this is happens all the time on live stream, so no big deal. I've got the website on screen, though, for anyone interested in learning more. AbraSilver.com is the website. Rick, we're getting to the end here. There were a couple questions sneaking in here that I want to relay to you. So Ami asks, this is interesting. This goes all the way back to our discussion with Benoit, but she says Morocco is dictated by a king. How can it be a good place to mine? And this is I guess the topic of jurisdictions and political risk and whatnot. I point out that Canada is ruled under a monarch, parliamentary monarchy, but still a monarch with a governor, as is Australia. And you would point out, Rick, that it doesn't even matter because you can use your assets under any political system. So your thoughts on Morocco, its government, and just the topic of governments in general.
The headline answer is I've never run into a good jurisdiction in my life. I don't know one. Scott's comments notwithstanding. I would point out, too, that no particular form of government guarantees you a good outcome. Look, as an example, at the People's Republic of California, a democracy with the tyranny of the majority, where the majority seems to be opposed to the things that I particularly hold dear. What's important, I think, are the institutions of government and the safeguards around private property and the rule of law. We have learned that a constitutional democracy is no guarantee of individual rights. We've learned that very well in the United States and Canada. I am not sure that monarchies have the same feedback mechanism, which is to say, I'm not sure that excesses can be corrected as easily in a monarchy as they can in a democracy. But I note, too, that some of the greatest autocracies of all kinds, I'm thinking Nazi Germany as an example, came about as a consequence of popular democratic will. When I say democratic, I'm not referring to a party, but rather to an institution. What I think is important in the African context, and I'm not lumping Morocco into all of Africa, is that you invest in countries where there are institutions that support the rule of law, that you are able to negotiate in your exploitation agreement, an agreement that allows you certain rights with regards to fixed taxation, reasonable depreciation schedules, relatively attractive abilities to import critical materials, and importantly, to export capital. What is useful about Morocco, I think at least in the last 12 to 15 years, is that the Moroccan government has put in place guarantees for foreign investors, including stability, fiscal stability, and the rule of law. And they have been able to attract to Morocco such industries, as an example, as automobile assembly and electronics manufacturing, that suggest that the Moroccan crown is in favor of foreign direct investment as a way to increase the material living standards of the Moroccan citizenry.
Okay, and we are winding down here, but I want to thank Chip and Frank for reminding me to mention this. The replay for this event is going to be available on YouTube as well as in Rule Classroom, ruleclassroom.com, as soon as that we can get it posted up there. And I want to finish, Rick, by just talking about the Royalty and Streaming Bootcamp that we have coming up on October 21st. I'm really excited about it because we've secured your friend, Doug Silver, Hall of Fame geologist, mining Hall of Fame geologist and financier, to headline this event on October 21st. Can you talk a little bit about that?
Yeah, I'm going to suggest, by the way, Albert, that we make Doug Silver one of the living legends associated with our conference, because he's precisely the type of guy with a 40-year experience in natural resource finance and many successful projects behind him that deserves to be there. Doug is, among other things, one of the persons that taught me the mineral royalty business. When I first met him, he told me that he had a database of 3,200 private royalties in the mineral business at a point in time when nobody much cared about royalties. This is a guy who has lived, eaten, and breathed royalties. He has a new book out called The Rise of the Royalty and Streaming Companies, published in conjunction with the SME, an industry group. And I actually, Albert, asked that you delay the Royalty Bootcamp until we could secure the services of Doug to introduce the bootcamp. For those people who are listening to the call, we have a very specific format with regards to these specialty bootcamps, these industry-specific bootcamps. We want the introducer to give people in the first hour or hour and a half a very, very, very deep overview of the subject, so that the attendees will be prepared from the beginning of the bootcamp to absorb the information that they will receive through the balance of the bootcamp, and importantly, can refer back to the whole bootcamp in context for the next 6 months as the tapes are posted at the Rule Classroom. I think this is critical. With regards to the subject, which is to say royalty and streaming, an argument can be made that one's entire extractive portfolio, both mining and oil and gas, could be affected in the royalty and streaming space. You may limit your upside because in raging bull markets, leverage is important, but you reduce your downside at the same time that perhaps you reduce your upside. So I think that the royalty and streaming space, because of the nature of it, the predictable returns on capital employed, the fact that in terms of your revenues, your grosses, your net, the high margins make royalty and streaming a very important and an underappreciated part of constructing a natural resources investment portfolio. I think we've done a great job of assembling a faculty and staff in the royalty and streaming bootcamp. But I think importantly that royalty and streaming investments are the most underappreciated component of constructing natural resource investment portfolios. So I'm extremely excited about our ability to produce it, and more than excited, in fact, elated with the introduction that we have. You know, we've done a great job, Albert, in prior boot camps of having people like WMC and Jeff Christian provide great overviews, and I think we continue that tradition, which is wonderful.
Yeah, I'm really excited about it. So October 21st, rulesymposium.com/bootcamp.
One other thing.
I think
One other thing. All of our investment products, Albert, we don't stress this enough. All of our investment products come with a gold-plated money-back guarantee. If you don't think that we've delivered what we promised you, email us. We'll give you your money back. Now, we've produced a good enough product over the years that we haven't had to give much money back. But I think it's an important promise from ourselves to our customer, and an important component of the value proposition of the conference, that we have this absolute gold-plated money-back guarantee.
Yeah, it's risk-free. It's risk-free. So link in the description, October 21st. Certainly hope you will join us. I'll remind you again, if you missed any part of this program, you can visit us at ruleclassroom.com or visit the Rule Investment Media YouTube channel a little bit later on, probably later today, to view the program in its entirety. And if you attended the Rule Symposium in Boca Raton and want to go back and watch the presentations, I don't have the link with me now, but please send me an email, albert@ruleclassroom.com. We'll be happy to send the link your way. That is if you attended the symposium and want to view it again. That does it for us, Rick. It was a great morning. Thank you so much for getting up to host this with me. I think it was a ton of value for the people. And I know that the sponsors were very happy to do it as well. So thank you very much, Rick. Thank you to all of you out there. And we'll see you again soon.